Hope I'm back here. Am I back? Looks like I'm back. I don't know what happened there. It was really weird. Two different computers all reset their screens. I don't know why that is. My internet's fine. Everything is good. I was straight kicked off of streaming. And I don't know why. It was like a shot across the bow. That was really weird. It's like Chinese bots or something. It's got like sometimes I really do think that it is. It's really weird how it happens. Like my internet will be fine, then all of a sudden it's like boom. And I've got like restarters that should restart the stream. Like it'll attempt to reconnect, and every computer I have just shut down for like the briefest moment. I always wonder why that is. I've never been able to find a reason for it. In the past, I've had like bent or broken fiber lines, but so just a note, we do have our first, that fake wick from this morning. This is the actual first wick right here. Breaking 718.70, looking to trade 710, I think, and then 700. We still need to get a second one. Let's listen to this news. I got kicked off news too. I got kicked off everything.
So Brent oil surging above $114 as the UAE.
We're bouncing right now on the hourly trigger on SPX. It's a nice place for a long. Auction's coming up here in just a minute. Could see one more. We could see like the bounce and then one more, and then we're out of here. So maybe a little bit patience here. Just let that auction hit and buy the doom. Well, we have to leave this one up in case we get the second one. Just ping-ponging back and forth on zero dates. Note that VIX 9 days still poised and ready to rip faces off here, so a lot of volatility expected. Watch out for a quick move to the downside before going higher. Rejection up here. Two minutes until the auction.
Oil futures extending gains, US up over $3 and Brent up over $5. Again, after UAE's Fajara says that a fire erupts in the petroleum industrial site following a drone attack from Iran.
Yeah, I don't know what that's from. Like, I know it's not my end. I don't know if it's like being dumped down the road from my house or if it's like something that's like internet wide or something. Maybe I don't know.
So we're shortly expecting the results from
It's a gremlin for sure.
6-month bill auctions.
Just note you should expect a spike in 3 and 6 month from what I can see. They couldn't see the way up. I mean, I realize they want to sell this down. I realize that any like for the new month they're going to try to sell this. There's just like nothing. There's a failure built in at some point. I just don't know where it is. It could be way higher. It could be closer to 730. Of course, they'll rage about that, but they want it like they want.
In the United Arab Emirates, again saying it just received information from a third party that a vessel was on fire.
Like sellers want like down 3% today, 3-4% on Monday. They always ask for more and more and more. It's going to take time. It's not going to be. I don't think it's going to be that quick. I don't think it's going to be like today you get your 3% down day. I think it's going to be a fucking process. It's going to be like fucking grinding for like a week or two, and then we finally swing higher up at the end of the month. That kind of shit. Yeah, that's what they want. You know what they want, right? Big fucking Mississippi, Chicago CME one lot sell on the open on Monday. Supposedly catch all the bulls. Like all the bulls want a roll too, so they it's kind of weird. It'll end up taking like probably a week or two. It's gonna be miserable. I think that's what I think is gonna happen. I don't think it's gonna be that easy. I mean, fuck, I was reading some shit this weekend. They want another crash. Like I was reading some traders were like, some of the bigger ones are like, we're gonna crash, and I'm like, you fucks want crashes like. It's like I want to crash, then it recovers, and like I want another crash, and then recover. It's like, what are you gonna do? Keep crashing. You want like tit for tat shit. It's just so fucking juvenile. It's not real. It never happens like that ever. Very rarely. I don't know why they're not showing us the auctions right now. He's delaying telling us. I don't know why. He's a bear to himself, so he's not going to say anything nice right now. This guy's going to go as big. He'll go as bare as he possibly can until he gets the down move to 7,000. Everything will be a bearish news point, I guarantee it. But here we go.
US 3-month bill auction coming through
361's not too bad.
61% with a bid to cover of 2.76, 2.76. The US selling 89 bids.
That's not too bad.
And awarding 14.97% of bids at high. 6-month high rate of 3.61%.
6 month 3.61.
The US selling $77 billion and awarding 2.03% of bids at high.
Bond market's still not freaking out yet. It's not very good for your kid's future. Well, we have a bunch of stuff to talk about today. I haven't gotten into it yet, but we have a few things to look at. We have to look at Bitcoin. We have to look at the divergence in that monthly velocity. We're likely beginning the end stage of the bubble, and there's something where there's the past week there's been a whole discussion on the narrowness of this rally that this rally is becoming, and I think some of the argument here is that is misplaced in the narrowness of this rally, and no one's saying that everyone will join in on it at some point, and I don't think you'll ever hear that publicly. I don't think you'll hear anyone saying, hey, the whole market's going to join in. We're going to rip faces off to the upside, and we're going to leave all of you behind. And that's really what's likely going to happen. Like on that thing about your kids and stuff, like the argument should be more any major correction should be bought with like you can have a seatbelt on, I guess. You can whenever you you can put a seatbelt on here where we are. You can put hedges on. But if you get any kind of like big doom shit, like even like this and this is very small, of course, but if you have like some kind of a moment where there should be more of these as we get closer to the top. But in this late stage bubble, they'll do everything to shake you out of this trade. The street they'll try to keep it from going high. Like there's a whole bunch of the market that's against that happening. But when it happens, what will happen is that they'll be forced to chase it and they'll amplify it. And that's how we actually get that late stage bubble. We have to look at it. We should probably look at it together because it's beginning. You can see it on higher frames on SPX. It looks just like the late 90s. But unlike the middle of the bubble where we rotate in and out of stuff, and I've got some rotation stuff in here for you too. I'll describe that to you. Like if you want to outperform the rest of the market, there are some. I think it's the. Oh no, I don't want to say it without it being it. So, but there's a moment here where everything should go up together. Is the point? Now there are a lot of stock pickers right now. They're not picking indexes. It looks like SPX is the hedge and Qs is the long. And there's a lot of like stock picking going on right now. Not so much index picking, but I think the indexes are a fine way to have some exposure to that late stage bubble. But I also think that if you're going to stock pick, you pick the biggest losers. Maybe not the ones that are running right now. The biggest losers should be huge winners. All boats should rise in this last leg of the bubble. I went back and looked and did some research on the tech bubble of the late 90s. And there was huge rotations through the entire thing. And then with the last leg of the bubble, all of tech went up. It was like anything and everything that got IPO'd, anything that was, it didn't matter. It was the shittiest company known to man. Everything literally went up towards the end of the bubble. We probably need to look at that today. We probably do, because there is likely some kind of a recession. We can look through that recession. Like we can look through if this resolves, we can look through it. But we're getting longer and longer in the tooth and this not resolving. June's kind of a bad month here for China in particular. There's danger of war with China come June and July. There was some talk this past week about China. Everyone was like, there was like a gotcha moment. China's been filling their reserves since last year, and nobody knew. That's a lie. That was all major news last year. Major news that China was filling. But those reserves only give them like, I think 1 or 3 months of oil. And they don't have enough oil coming to them right now. They're near war, believe it or not. And we have a meeting with Xi on the 15th, I think, or 13th, 14th, right before Jerome leaves. So I think that, and I just read an article like a moment ago saying that Iran's got the U.S. Iran's got the U.S. by the balls or something. That's false. That is 1,000% false. The U.S. has China by the balls right now, by the literal balls right now. And Iran's got nothing they can say. Nothing. If anything, they'll be admonished by Xi, because Xi's being pushed into war, unless he wants to be pushed into war through a proxy, which is fine too, because we're there. All of our ships are there. We're staging everywhere right now. The U.S. is ready to rock. and it's probably not Iran. It's probably China. All of this leads back to China ultimately. And you got Ukraine in a good position to fend off Russia. You have
the UAE Fujara attack says that this news has not yet been officially confirmed by Iran.
There's a nice little up, little down move right here. This should probably be bottom right here. We got a little bit more. Be careful to just not careful, but we're coming up into $18. The weekly and daily trigger on it. VIX 9-day. We could stall here for just a minute. Just looking for some sellers higher. What is this here? This news has not yet been officially confirmed by Iran. Tasman news on Fujairah attack. So lots of noise still. Unconfirmed reports still of the Fujairah attack. Just waiting for some supply here on VIX. We're stalling here. And gap is now closed. There might be a little bit more gap here, but it's fairly close to being closed. Let's see if we can catch a turn higher here. Did the auction. Try to mark that as a bottom. Need to get above this one right here. It's really the only one we need to. This is it right here. Just need to get above this to take a long here. Just this prior high right here. We failed to catch one here.
Accused of lithium sector corrupt.
That was a low right there, not a high. This was lower than this one right here. I'm going to rotor root around a little bit. The yield's still squeezing on the 3-month. This is kind of weird. They're still sticking to this story about the 2 missiles hitting the U.S. warship, even though it's been disproven, or it's been set, or there's denials, I should say. I should be more careful with my verbiage here. Financial Juice is sticking with their assessment that a ship was hit. Let's see if there's anyone So Jerusalem Post saying Iran did not hit a new U.S. Navy ship. There's a lot of arguing saying yes and no on this. There's no confirmation yet. There's still some people saying yes and no on this. Getting a little bit of supply in VIX now. I think VIX can still go up to like 1864, VIX 9-day up to 1864. We have a daily trigger crossing a weekly trigger on VIX. Could lead to a huge squeeze to the upside if we can get that cross. A rejection on that cross. What are you guys doing? What the fuck's going on here? Give me 1 second here, guys. I'm going to set this all up for the rest of today here. Hedge funds aren't buying this melt up. No shit. We already know that. They're not going to buy this melt up. Duh. On here. Market correction risk. Oh, God. Market correction risk. Why summer 2026 looks risky. We got to talk about this today. There's gonna, I think there's gonna be an attempt to leave retail behind here. We're setting up to like leave retail behind in fear. We did like in the 90s, late 90s, as we came into like late stage bubble. It was a huge conundrum where like bears thought we were gonna crash, so they were positioned short. retail bears, and then retail bulls were too scared to get long, and we had this massive divergence start on velocity. And if you looked at the velo at that time period on higher frames, it looked really bad. Like, don't get long here. And we have the same setup again. Still no new high here. You see it? We've got no new high there, no new high there. We're just stalling right now. Just be patient here. Just be patient. I'm yawning. I'm not yawning because I'm tired. I'm yawning because I guess maybe because I need more coffee.
TTI oil facility in Vajira that was struck in the aerial attack.
Let me see this here.
From the UAE saying that their air defenses are responding to a missile threat. So again, this is coming through again.
Harnett, this event could be the door to doom. I'll read this to you. This is Treasuries. Say goodbye to easy gains that powered the market. Like, oh my god, I got them all today. I got every fucking bear. I do. I got every bear article out there. I'm setting them all up right now for us. They got a whole fucking book. It's like they write the fucking book every fucking month. Like every fucking month. Hold on here. CNN expert says Iranian suicide dolphins going after U.S. ships. I mean, like that, they're dragging out everything.
Are responding to a missile threat.
Hold on here. God. We read this side note from Citadel 2. Read this to you. Let me see here. Citadel had a pretty good article this weekend. As breadth deteriorates, Goldman partner warns market is overwhelmed by a single area of AI narrative again. Bear news. Ahead of Trump Z summit, Beijing tells Chinese firms to ignore U.S. sanctions on teapot refineries. Berkshire cash hits record $397 billion after selling most stocks in 2 years. I think they've been using that Berkshire Hathaway, like they've got more cash on record than ever before. They've had that running for like 5 years or something, right? And they just had their meeting this weekend, didn't they? I think they had their meeting this weekend. Market anxiety rising again.
WTI crude and the dollar, the extended weakness in S&P again as the UAE notifying of a fourth missile attack.
Not as good as it looks under the surface. Another headline. Goldman warns crash risk spiking as market breadth plummets to .com bubble lows. Oh, man. Oh, man, it's so... Oh. Are you all bear curious right now? All of this is in the face of them just wanting a dip to buy. I just want a dip to buy, so I'm going to run the worst of the worst. We probably have to look at this today. Hang tight here. And then we'll go through some earnings. Some more earnings that are coming up. I've already reviewed most of these, but we will look at them and the upcoming earnings. We'll segue out of the end of the day today. Let's see if we got here. Where is this? What went wrong here? No, I don't want to log in. Hold on here. Bears. Week beginning the 4th. I think this is right. Save image as. Why is this not showing? Okay, can I save that one? All right, there it is. Why is this asking me how to open this? What is going on with this? There we go. It's almost as if Windows 11 is trying to use fucking AI to fucking change my preferences. I wouldn't doubt that. I wouldn't doubt that at all. Let's bring this down a little bit. We got Palantir after the bell. Duolingo, we should look at them. Shopify in the morning. Then we got AMD, Advanced Money Destroyer, on Tuesday after the close. We got Disney in the morning, CVS on Wednesday. Then we have IONQ, ARM, AppLovin, Dutch Brothers. We should look at them. Snap, I own some of them. Fastly, Beyond, we can maybe take a look at them. Irene, what's up, baby? What's up, Irene? Or Iran? McDonald's, we want to look at. Coinbase, we want to look at. I know someone of you out there likes Coinbase. We'll look at all of these. This is all still legit right here. Just keep bringing this over. Just looking to get that new high in here. We're just grinding right now, not bearish. Just grinding, killing options. VIX isn't near lows. Why are they saying that? VIX is close to recent lows. No, it isn't. It's moving higher right now. It's at 1739. It's about to get rejected here in just a few moments. We should start squeezing here in just a few minutes. Just waiting for some supply at $18. We're at 1739 right now on VIX 9-day. If you have access to triggers, you want to be looking at VIX 9-day and where the daily and weekly is. VIX is not at lows at $18. I'm sorry. I just saw a highlight saying VIX is at lows. BTC is pressing against the key $80,000 level. This will tie into Coinbase's ER for sure. Some other ERs out there. We'll talk about Bitcoin too. Let me write all this down, make sure I got it all right. So we're going to do the macro stroking ourselves. Macro stroke. So we know macro means nothing. We're then going to go into Bitcoin and then earnings. So that we're set for the month and for the we're set for the month, and we already did gamma. We already did charting. So we'll start with macro, and then we're going to go with news prep. And what I was just discussing with you earlier was if we're late stage bubble, and like as a retailer, if you look at the divergence in velocity, it's pretty bearish. But I don't think you can trade it. I think like whenever you're at the late stage of a bubble, what often happens is you'll see divergences, major divergences on higher frames, and theoretically, someone is being left with the bag to hold. I don't know if in this case it's retail anymore. In this day and age right now, retail has been killing the street, killing hedge funds, killing CTAs, you name it. Retail's done very well. Now, just like a war, you have battles, and even though retail's been winning, do they win the war? Is the bigger question. Now, we're not in 2008 anymore. We're not in 2000 anymore. And I want to say at the bottom of COVID, it was hard to get my friends. I had friends then that were still rolling into more puts. There were some of my friends that gave back a lot of money when we bounced on the recheck. If anyone here was trading during COVID, we had a bottom and then we went back and rechecked that bottom again. And a lot of people I knew stayed bearish. But I don't know that after, like, post-COVID, or COVID into post-COVID was like a real rise in retail, unseen since maybe 2000s. The 90s and the 2000s was a big like graduation for retailers. I don't think that I've seen that much retail participation until like COVID. And I remember we washed people out during COVID too. So like beginning of COVID, we watched a bunch of bears, and then we watched out a bunch of bulls. I remembered starkly that in 2022, I was shocked at how many people left Twitter. They got flushed and washed out. But since then, the past few years, I mean, I realized we're going to wash a bunch of people out, but since then, it's from the stats that I've seen, retailers have done a lot better, and they're actually a threat to the street. So if you're looking at the war between the street and mid and small family offices, mid-sized funds and stuff like that, the bigger question is like, what happens here? Late stage bubble. Is the top in that bubble? Is the bubble going to extend into next year or not? Big questions, big heady questions, right? Are you tricked into being too bearish to look for that extent of the end of this bubble to be much higher? Are you too scared? And then do you get bulled up once you miss that run and you become the supply at the top of the bubble? Do the bears, retail bears, lend the money needed for it to go higher, so you're positioned for this? And I was very concerned with the narrative over this weekend, which was the general narrative over this weekend was we're going to start crashing. Basically, there's some counter arguments to it, but that we're going to start crashing, and the top is in, the bubble's topped, and you name it, like all kinds of nonsense. Now, some of this could just be machinations of the street wanting to erase part of that candle. That big green candle pisses them off, I assure you. From what I read leading into that green candle, or the end of that, the last 40% of that green candle for last month, the street was out. They were out, and they claimed we were going to roll for like the last 2 weeks of April. I'm serious. Like, they were pissy, stinky. As a matter of fact, I posted on Twitter 2 weeks ago on a Sunday a chart of a bear pointing, saying, just look at the chart, read the chart. Because you knew 2 weeks ago, on that Sunday, 2 weeks ago, they were like, fuck this is rolling, we're going down. And they were pretty angry. And so we've been up into Friday. So the rage is even thicker. And so the doom is getting thicker and thicker and thicker. And they're writing books right now. We're not even through earnings season. We are through most of big tech, most of it at least. Move this over here. The first thing I'm going to read to you here, I'm going to start from the weekend prep that you went through, doom scrolling all weekend. Not you personally. If you're like, Cap, I wasn't doing that. I wasn't speaking to you. You know who I am, who I'm speaking to. The bears out there, you know who I'm talking to. Goldman warns, this was on Saturday at 11:15 a.m. Okay, I'm going to give you the times and dates of these articles. So Goldman warns crash risks spiking as market breadth plummets to .com bubble lows. The topic of negative breadth has been increasingly notable in recent days. 2 weeks ago, the S&P 500 hit its first all-time high since the start of the year on negative breadth. And this has continued with Friday's fresh S&P record high on pace to be the fourth of the past five achieved with more declining stocks than advancing, as only a handful of mega cap names matter. While breadth has collapsed, and I want you to think about this in the context of if we're at the end of the bubble and it's still not the top, think of it like the top's not in. We get one more leg. Just think of it like that. And then I want you to think about the no breadth. I want you to think about me telling you at the end of these bubbles, all stonks rise. So you have a bunch of stonks that are not participating. They're getting sent down to their lowest lows. And for them to participate, they should be done, right? Like I'm short all these other stocks and I'm going to let them all, lift them all up. They're all going to join in and we'll get that breadth we're looking for. Even though velocity is, and breadth is, which is part of Velo, there's a huge divergence. So while breadth has collapsed, momentum has exploded as traders refuse to do any work and pick stocks, but simply chase the fastest momentum names higher, hoping that they can sell before everyone else does. It didn't work out for those who plowed into car melt-up only to see their gains vaporize in days. So I think car made a high of $800 on April 21st. They were trading $200 on May 1st. In any event, now that, like anything up to $800, you should be taking profit. And they probably lost their support. They were in a distribution top anyways. So I don't see that personally. But it's being used as an argument right now, CAR. But they were already in at like 650 or something. They were already ready to roll. In any event, a growing number of institutions are getting frustrated, concerned by the market's collapsing breadth. And overnight, Goldman's chief U.S. equity strategist, Ben Snyder, and team, these are the smartest people in the world, mind you, supposedly, have published a note in which they tactically believe that narrowing breadth has historically indicated equity market drawdown, i.e. a crash. I agree. Risk, right? But when is the bigger question. While momentum volatility will continue to remain elevated. The clearest implication of narrow breadth for investors is continued momentum volatility, which can act as a destabilizer for the market once momentum reverses. While narrow breadth can persist for months.
The Dow Jones down 1%. So we are seeing a leg down in the indices here.
There's a leg right here. So nothing here for us yet. In any event, a growing number of institutions are getting frustrated, concerned by the market's collapsing breadth. Overnight, Goldman's chief equity strategist, Ben Snyder, and team have published a note in which they tactically believe that narrowing breadth has historically indicated equity market drawdown, i.e. risk of crash, while momentum volatility will continue to remain elevated. So this harkens to what I was discussing with you earlier about how the bears are looking for crashes, the bulls are too scared to get long. That you can see a lot of volatility as we make these moves higher. So you'll see like volatility corrections, right? Big ones, big moves down, but even larger moves higher.
Headline catalyst here, can't seem to find one at this moment though.
And that this could take months, not a day, not a week, but months and months. And they are cognizant of this. The clearest implication of narrow breadth for investors is continued momentum volatility, which can act as a destabilizer for the market once momentum reverses. While narrow breadth can persist for months, not a few months, not a couple months, months. That implies 5 months, 6 months. Usually it resolves in either a catch up or a catch down. And that's what my point to you is this, like you can get these big corrective moves, but then it's like ramping higher, ramping higher, ramping higher. And then once we top the bubble, we catch down in a major way.
Rising 10 basis points on the day now.
With both, and this is interesting too. It says eventually it resolves in either a catch up or catch down, i.e., a melt up of everything else, or a meltdown of only a handful of market generals, with both outcomes consistent with momentum volatility. So they're laying out this path of this late cycle bubble. The Goldman Sachs warns that banks' prime data shows hedge fund net tilt to momentum ranks near a multi-year high. In addition, while hedge fund gross leverage has declined during the last couple weeks, it remains elevated relative to history, ranking at the upper end of the 5-year range. In short, the longer the narrow breadth melt-up persists, the greater the risk of a sharp, violent drawdown. To avoid the more popular term crash. Now, mind you, we just did a crash. Just want to make sure I get this right here. Well, it wasn't quite a crash, but I'm saying crash, but crash is marked by just a few days. It normally leads into a bear market. Hasn't recently because we're in a bubble, but the top to bottom drawdown here was it wasn't too bad. 9.5%. So they're making the argument here that you haven't seen anything yet, that we can crash even, or we can go even deeper. That's 17 to 20%. To the downside. They're warning for even more than you saw this spring, a new market low, a double boner or a double correction, as it would be known. This VIX wants to run and escape, huh? Let's look at this VIX together really quick. See this VIX 9-day right here? The bigger question becomes, do we have supply for VIX in here? See where we are right here? Do we get the supply? And we're going back to the cross of the daily and the weekly. And do we sell to the downside, or do we get the breakout up here and then we start correcting right away? It's pretty quick, right? May 5th and 6th. So you want to be watching this closely in the background. Hang tighter, guys. Still waiting for this prior high right here. No difference. Just that one right there. Oh, hold on here. I think I drew this kind of fucked up and tried to fix it earlier. I just need that one right there. Same trade, just waiting for a dip to buy after a squeeze higher. The Goldman strategist warns that the bank's prime data shows hedge funds net tilt to momentum ranks near a multi-year high. In addition, while hedge funds' gross leverage has declined during the last couple weeks, and I told you that a few minutes ago before even reading this, that they were out like 2 weeks ago, like middle of April. In short, the longer this narrow breath melt-up persists, the greater the risk of a sharp, violent drawdown. To avoid a more popular term, crash. Key highlights from the note are as follows. Starting with momentum, Goldman notes that this factor has surged by 25% year to date. I'll bring this up for you and show you this. This is the breadth collapsing. Starting with momentum, Goldman notes that this factor has surged by 25% year to date, but the rally has been interspersed with a sharp drawdowns as stocks are increasingly led by just a handful of names, and all it takes is a modest wobble for the house of cards to collapse. The S&P 500 has rallied 14% from its low in late March and now trades at a new record high. You know what they're implying here, right? Watch my cursor. That we're somewhere in here and then up and then straight down, 2000. We're crashing, bros. But there's something more important to this note here. I want you to remember this here, right where we are. So there's like 1998, and then breadth collapsing into 2000, but this was like 2 years. See this right here? It's like 1998, 1999.
That they expect a U.S.-Israeli strike on Iran.
Voice news.
You got to turn that off. I don't want to hear him talking right now because he's annoying the fuck out of me. But like down here, you can see it. See where we are right here? And you notice this big spike up, but even then it came all the way down into 2000, but the market didn't go down, is my point. The market was volatile on its way higher. I'm going to explain this. I'm going to show it to you in crayons, like the dog on it, and everybody else out there that can't read. I'm going to show you what this translates to with crayons in just a moment. So I'm going to continue to read about this Goldman note here. It says, but the rally has been interspersed with a series of sharp drawdowns as stocks are increasingly led by just a handful of names, and all it takes is a modest wobble for the house of cards to collapse. The S&P 500 has rallied 14% from its low in late March and now trades at a new record high. However, the median S&P 500 constituent remains 13% before its respective high. That divergence, which has taken place alongside the momentum rally, has pushed market breadth to its lowest level since the dot-com bubble. By now, even the hot dog vendor knows that the narrow breadth rally has been driven primarily by stocks tied to the AI infrastructure buildout. Mirroring the narrow breadth of recent earning revisions, the SOX semiconductor index has jumped by 30% since the start of the Iran war, and Mag 7 have collectively risen by 10%, while the equal weight S&P 500 has declined by 1%. The narrowness of the market rally has reflected the narrowness of the recent S&P 500 earnings estimate upgrades, which have also been concentrated in technology stocks. The sharp but volatile recent surge in momentum also reflects the strength of the AI infrastructure theme. And this time is not different. Narrow market breadth can persist for months, but it always resolves with a leadership rotation. That's not true. Yes and no. The end of the internet bubble, all stocks mooned, every single one. So if you're seeing like a bunch of stocks that aren't joining in, or they're hitting lows, or any of that kind of stuff in the background, or they're not participating, the expectation is here that they're going to participate in a big way, bigly, and it ain't gonna matter what you choose for stonks. If you were like, they're trying to tell you that like, don't go long the ones that are already up. Those are going to go up too. They're all going to go up. Everything, whole boat, eventually is going to go up at the same time. Since 1980, the median episode of narrow market breadth based has been 3 months, with the longest episode in the late 1990s lasting for more than 2 years. While narrow breadth can resolve via either catch up or catch down, both outcomes are characterized by the underperformance of previous market leaders. As a result, the momentum factor has realized above average volatility following other narrow breadth periods in recent decades. And we expect this pattern to be repeated going forward. Extreme hedge fund positioning adds to the likelihood of continued momentum volatility. This is all saying what everything I've said to you, simply put, which is expect volatility, expect like corrections along the way. Every time we're going up like 5, 10, 15, 20, 30%, you're going to get a correction relative to that move. So we just had, I think, a 14% move. We had a 10% drawdown, a 14% move. Now they're looking for 3 to 4%. Extreme hedge fund positioning adds to the likelihood of continued momentum volatility. Goldman Prime Services data shows that the hedge fund net tilt to momentum ranks near a multi-year high. In addition, while hedge funds' gross leverage has declined during the last couple weeks, it remains elevated relative to history, ranking at the upper end of the 5-year range for both overall hedge fund universe and fundamental equity long-short funds specific. So what they're telling you is hedge funds have been short for about 2 weeks. They want to dip to buy in May, but that they remained exposed to this upside. And I think that is the theme for you, is like seatbelts on. You can put a hedge on if you want. But any of these large drawdowns, let's say you see a quick 3% down or 4% down, you should be buying those. They're going to result in an even bigger move higher. So if you have 14% down or 10% down, you should expect 15, 20% up. If you see another 3% drawdown, you should see 5, 6, 7, 8, 9, 10 up, like violence to the upside as we continue higher until this bubble pops. And this bubble is not done. This bubble is not done. We have not built out a whole bunch of shit yet. We have not had IPOs of companies we're looking to IPO like Amazon did. Amazon was a late IPO in the first bubble. I assume that the guys from that are launching OpenAI likely are using the Amazon model for OpenAI as a leader post-bubble. As a matter of fact, I'm actually on my way to New York. In early June, I'm going to Tech Week for New York City, and I'm going to have a front row seat supposedly to find out like where we are in the tech build out with all these all these AI companies. They'll all be there. I'll be there listening to these guys talk and blab about where we are in the actual bubble, where we are in the build out. So we'll find out more as we get closer to summertime. But narrow breadth can resolve either by catch up or catch down. Hedge funds are still net long. At the index level, sharply narrowing market breadth signals drawdown risk, and elevated current positioning exasperates that risk. Furthermore, Goldman explicitly warns that sharp declines in market breadth have historically preceded larger than average S&P 500 drawdowns in the subsequent 6 to 12 months. That's not now. 6 to 12 months is year end next year at some point. So a bear raid comes seasonally in springtime of 27. Now, we have more to talk about that too, because we have to look at, does the hourly or does the monthly trigger catch up to price? And we're rolling into that. We'll know ahead of time if the bubble is popping. But 6 to 12 months, the elevated current level of the U.S. equity sentiment indicator of investor positioning has also been a signal for below average near-term S&P 500 returns in the past. However, the positioning indicator remains far below previous highs, and the tool is a stronger statistical indicator at low levels than at higher levels. Narrow breadth can persist for extended periods and conveys very little information about the ultimate equity market trajectory. I agree with that. I think you have to literally put your seatbelts on, and every drawdown you're getting long. Every single one. If you see any major drawdowns, 3.5, 4, 5, 10, 15, 20, even 20, even 30, I think it would result in a 50% up move. So any of these big drawdowns, I'm personally not afraid of them. And I don't see, normally you see I want to show you this too. Let me just show you guys something here. Normally, what you'll see is price action like this. The market will go up, right? Wait a minute here. So the market will be going up like this pretty violently, right? Big violent drawdowns, big violent moves higher. And the market would start to stall almost like we did last fall, like it's sideways. But there's a difference that didn't happen last fall. When we begin to see the top, what you should see is unlike this past fall, you should see the monthly trigger race up. So the monthly trigger did not do that this past fall. It stayed down low. You should see the monthly trigger race up here and flatten. Just like that. And when you see this is where you have to be fearful. This is where the fear kicks in right here. If you see this and then you see the big move underneath it, and it should be, see the difference between where this is and where that is. You see that gap? See how there's no gap right here? That's what you should see. Something like this, a downstroke. And then we start rolling to the downside. It should look just like this. Now, this is crayons for the trader who doesn't want me to read them this stuff. And I want you to see the difference between this high, see the gap here? And see how small this gap is right here? That's what it should look like when we're done. And we haven't seen that in any way, shape, or form as of yet, but it should happen. And we should enter this last leg here. Hold on, I'll come back here to this. Still no trade here. Don't take this trade. You need to see this above here. Above, okay? Keep moving this over. You need to be above this one right here to even consider putting trade on here. The near-term directions of both market breadth and momentum will depend on the macroeconomic outlook and the read-through from the Q1 earnings season. I'll make a note here. I'm going to read you something later that says something on this topic, but if you look at the Q1 reports in Q2 and Q3, we're not getting the prints, upside prints on huge beats in any of these companies that haven't joined in breadth. We have expectations that we're going to beat estimates for summertime in likely fall, and then the guides start coming out kind of negative into Q4, Q1 of next year. An improvement in the geopolitical, so the near-term directions of both market breadth and momentum will depend on the macroeconomic outlook and the read-through from Q1 earnings season. An improvement in the geopolitical outlook would likely broaden both earnings revisions and market performance, helping recent laggards like consumer stocks rebound in a catch-up. Conversely, a severe deterioration in the war that raises concerns about semiconductor supply chains or causes investors to reduce their equity market exposures would likely catalyze a catch down. Earnings season results and commentary could also shift the market's perception of the outlook for AI-related spending and earnings, affecting the recent market leaders. However, mega cap hyperscaler results this week catalyzed a further increase in consensus CapEx estimates and will likely extend recent market momentum. So all this bearishness is like they're trying to give you the worst of the worst here, but they are acknowledging that it's in the face of a bunch of good news, and also the build out not being done and it not fitting the profile of the late stage of the bubble in the late 1990s. It's also noteworthy that today we're getting headline risk drawdowns on this like geopolitical doom, right? Geopolitical uncertainty here. That said, after reading all of the above, those hoping for a near-term crash will be disappointed. Now, this is from Goldman, who just told you like doom, right? They're telling you to prepare for it, but where and when? And it's later. It's 6 to 12 months, and at minimum. And you'd really need to see like bad things happen in Iran, basically, like really, really bad things. So that said, after reading all of the above, those hoping for a near-term crash will likely be disappointed. Goldman says that over the medium term, market breadth is unlikely to fully normalize without a maturation of the AI trade. I think they put that as a far, far, far away, or not going to happen. Eventually, clarity regarding the widespread impact of AI should expand the AI trade to include winners outside of the infrastructure complex. That's years down the road. Years. That's like fucking 3-5 years down the road after the drawdown once the bubble pops. Eventually, clarity regarding the widespread impact of AI should expand the AI trade to include winners outside of the infrastructure complex, including companies boosting revs by selling AI products, companies using AI to increase productivity. This clarity should alleviate the pressure on many companies facing perceived AI disruption risk. However, Goldman warns that this clarity is unlikely to occur without significant further enterprise AI adoption, which will be a gradual process and will come long after the current narrow breadth episode is fizzled out, which means that the countdown to the next day of reckoning is now on. So I agree with this broadly. This is like broadly what I think too, but the time frame is likely not on most people's I'm serious, like most people are likely not on this trade. Here, let me explain this better to you. I've explained this on the show in the past. I'm going to do it again. Give me one quick second here. Give me one quick second here. I want to show you this here if I can. Some of you have seen this before. I feel like you got to remember that you got to remember on my side of things. I want to take a quick break here. On my side of things, I forget sometimes. I feel like we've covered things too many times when I may have not, or I need to cover them every 3 months or month or whatever, or 6 months or whatever. We're at the beginning of a month, so I do want to cover this right now again. So if some of you are bored by seeing this, till you're blue in the face or whatever, but for some of you out there, I want to say something that's important. And I know you're not going to believe this. I know that a lot of people say that you cannot predict markets. That's false. A lot of people will say to things like you cannot predict a black swan event. That black swans are real. They're not real. They'll tell you that you cannot predict a crash. They're wrong. Like a crash with a bear market, or like the Mike Burry shit, that kind of shit over there. That's false. You'll hear anecdotal stories of people being caught in 2001. You'll hear anecdotal stories of people being caught in 2008. You'll hear anecdotal stories of people being caught in COVID. That's false too. And I'm going to prove it to you here right now. No, you'll say like, well, if Jim, well, how does Jim James know this and nobody else does? They do know this. They just don't tell you. Like the street's never going to tell you that that they know generally where the market's going. The street's never going to tell you that they know when to exit. If any of you remember the beginnings of Occupy Wall Street, I was a burner then. I went to the Occupy Wall Street installation at Burning Man in Black Rock City. I remember the Wall Streeters clanking champagne glasses on the second, third floor balconies as there were protests. And there was rage. There was absolute rage. And I want you to think about that for a minute. Let me see if I can bring this back up here. This right here. This is like a famous thing right here. Anyone remember this? Anyone here remember that? That is an iconic photo. There's a few more. There's a few more photos with people drinking champers. See these people right here? These people knew where the top was. They knew exactly where the top was. And it's not hard to find. So the stock market is a game of duration. I know that we use duration for the bond market, but I want to for you to understand, the degenerates out there, that the stock market is a game of duration. It's like getting long for long periods of time, years and years and years and years and years and years. And every major drawdown you add to your longs, and you do not get off because of your fear. I want to impress that upon you, that when you're in the depths of hell in the stock market, when you're in a bull run coming into a bubble, you're literally adding. Add, and all fear. It doesn't matter until you're going to add on a monthly trigger on an index. Does it make sense? I'm going to explain it to you here real quick. I'm going to show it to you right now. So on this article, I agree with everything they're saying. The only thing is that I feel like they're obfuscating parts of it. Are translating it kind of more complicated than it needs to be. So let me explain this to you guys here. We're just waiting for this to make a new high before we get long. Come on here. So this is the S&P 500. This is SPX. We're on a daily basis here. And whenever we come into whenever price comes into this blue line right here, it's risk off. See it right here? This blue line is risk off. And you can go risk on the moment that it clears up. That's normally what? A squeeze above, right? Back to successful back test with a new high, like 2 new highs, right? You can see one right here. No new high. Back down to risk off again. You see that, right? We have a high, then a new high, and then we're risk on again. You see it? Fairly easy to see. But generally speaking, what I want you to see here is this blue line right here. Risk on, right? Risk off underneath, right? Get back to risk on again. No risk off here. You see the spread between price here. This is very important. I want you to see this. You see how far away price was from the monthly. Normally, if this was the top, you'd see this monthly race higher. This monthly would race all the way up here. That's what it would look like. Something like that. I'm going to show you what it looks like here in just a minute. There's a few things I want to show you, which is we're in a bubble. Can everybody agree to that? We're in a bubble? Does that look like a bubble to you? Looks like a bubble to me. Looks like a bubble, right? That's big bubble. Taking it down, woodshed. Taking it down, woodshed. Looks like a bubble. Let's look at the previous 2 bubbles we have a comparison, though, that we're comparing to. And it's these 2 right here. 2008 would be a near comparison. This is where we didn't know, not only do we not have a crash, we had a bear market. Not only do we have a crash in a bear market, but what's not told in here is that individual single stocks went to fucking zero. They all went to zero. And more importantly, what I want to show you is that this monthly trigger, do you see getting off the bus here? This is where the risk off danger comes in. You can see it right here. Monthly just moons. And what's crazy about it is you were actually given in 2008 a chance to get off the bus. Imagine being the guy where you're underneath monthly trigger and risk off. You hit a new low, double bottom, right? Everything looks great. Failure to get a new high. Get right underneath here. Risk off. You're given a chance here. You're given a chance right here to get off the bus before ultimate doom down here, right? You're already being told, risk off, sell everything. You're not above the monthly to get long. You're being told right here to get out. And if you didn't, you're given another chance to get out. So you're not even being taken to the woodshed. Like you're literally being given chances to get off the bus. 1, 2, and 3. You're being told, get off the bus, get off the bus, get off the bus. And so when you see this big move down and you see those people drinking champagne, there's a reason for that. They get off the fucking bus. Make sense? So let's look at this one over here. This is the bubble from 2000. And we had the same thing happen. Look at this. Look at this monthly racing higher than this prior low in 99. And this monthly trigger begins to come up from the monthly low in 1999. It's racing higher and higher and higher and higher. And lo and behold, you're being given a chance here. You're actually underneath here. Get out, get out, get out, get out. And you're even given one more fucking chance up here again. Being told to get out, right? 1, 2, 3, 4. So on the negative side of things, Here's the big bubble right here. Notice how we continue higher, vertical, right? Vertical, but then we start flattening in here. You see the flattening? So unlike last fall, do you see how the monthly's right here? Do you see us flattening? I'm going to show you. Last fall didn't look like this, did it? Did anybody see the monthly up here on the fall flatness? No. We didn't see that this spring. We don't see the monthly trigger on our lows from the fall, do we? We don't see that yet, do we? We have not seen that yet as of right now. I want to show you something else too, which is breadth. You see how we're peaking out and topping out on quarterly and monthly breadth? This is way back here, right? Start seeing new lows. Seeing here, this is 97.98. Remember this. And we still went higher, didn't we? Still went higher in here. So you should begin to see what GS is saying. Divergence in breadth, divergence in velocity. Market continues up. It can last for months and months and months and months. Historically, all boats rise, not just the leaders. Whole market rises. If you go back and look, you'll see that like stonks ripped faces off alongside the indexes. And I want to show you where we are currently right now. And do you see this here? Starting to get a little bit of a divergence. Starting to peak out here to try to top, and maybe we'll get a divergence on quarterly in June, right? Start peaking this out on a high, start trying to diverge, all this kind of stuff. So it looks like it's starting, but it doesn't look like we're there yet. And when these guys in the street, when these people drinking champagne tell you these things, right? That's what you should be looking for. So like if you were to have just S&P 500, if you were to have just an alert on, it doesn't matter if it's Qs, doesn't matter if it's NDX, doesn't matter if it's DIA, doesn't matter. It matters on IWM, but on these in particular, and this one in particular, let's say you were to start an alert here, add an alert on triggers, condition trigger, or maybe price crossing triggers. And we do the 1 month trigger right here, MT. You see it? Monthly trigger. You want to see this really quick? If you've got our stuff, price crossing. I'm not going to do crossing down or up because this could tell you either. If we get back out of that blue, if we could pump above the blue and get two new highs on a daily basis for the monthly trigger, not hourly, not 4 hour, two new highs above. But if you have crossing down on triggers and you pick the monthly trigger, right, and you click create, and you could even send this to your email, you can send it to your phone. Hell, you can sell this to somebody. You could sell somebody a crash indicator. The moment you get off the bus, I'm going to send you an alert. Right? So you touch this right here. That's your first alert. Go risk off. Right? Here. On October 18th, 2000, you would have been told, get the fuck out of the market. There's your first warning. That would have been your first warning. Or at least don't get back in unless we see a series of two new highs on a daily basis. You can even write a note to yourself on that alert and say, hey, if this happens, you do this. If that happens, you do that. But that's the way. Now, there's some bullish stuff here. When I talk to you about duration, when I say to you, you're going to hear a bunch of doom, you're going to make big push up, drawdown, right? Big push up, drawdown, violence, right? Huge push up, huge down, huge up. Let me show you what these are, what these moves were in late stage bubble. Let's go to like 98 through 2000, like right here. Because we don't know exactly where we are, but let's look like start right here. just as an example. And these are pretty fast drawdowns. Like here's one right here. This is 10%, 11%. This is pretty close to what we just did, right? This is February 1997. Let's look at what we did thereafter. So you're too scared. You think we're going to crash because we have a divergence in breadth, right? You think we're going to crash. The bull is scared shitless. Bull is just like, fuck no. There's a big up move there. That's 31%. 31. We have a down move here. This is we'll call this the high right here, but we can do it. I mean, it doesn't matter where. You got an equal leg right here, but you go down. That's 13%. That's a huge down move. Huge. This price action would shake 3/4 of traders out, right? Then we have the up move from here. Where does this one go? This one goes 38%. So I want you to think about, like, you got a 3% down move, you got a 15% down move, you got a 10% down move, followed by these major rips, right? You have another down move over here. Tell me this wouldn't shake you out. 31% up. That's 26 down. Big, right? Did not touch the monthly. That's add. Not only is that add right there, you could have added here or even here. Like add to your position, no risk off. How many of you would have stayed long there? That's not an easy one. I don't think that's easy for any trader. Hey, I want you to add on this monthly trigger right here. You'd be like, you're out of your fucking mind, dude. We're going to crash, right? What did this translate into before any kind of a pullback? This one was 53. That means the stock market almost halved. We're trading 700 right now. It's like the stock market going, this is October 1998. This is July of 1999. That's like the stock market going up 350 fucking points. And, this is October 12th. This is July 23rd, 9 months. Effectively going up 50%. That's the last leg right here. You see that one right here? Scare you? Panic? 50% drop. That's insane, right? How many people do you think got shooken right here? Tons. And then we went up. This is a big one to remember. First trip to weekly or to monthly was we didn't go through it, and we continued higher. This drawdown right here was tip to tail, 13%. Woo! This is definitely going to roll now, bro. But it's not underneath the monthly. Top 25%. Think about, just the way to think about this last leg here. Having to have a seatbelt on and me tell you that the stock market is going to double. Double. It's going to be at 1,400 when we roll. If I told you that today, we're going to go up 1,400 by the end of the year, what would you think to me? You'd think I was out of my fucking mind, right? I'm out of my fucking mind, right? I mean, I'm not saying we're going to be at 1,400 at the end of this run, but the catalysts are there. The roadmap is there. The shakeouts are there. And yet we haven't gone underneath that monthly trigger. So what's the plan? The plan has to be expect volatility, expect divergence on higher frame velocity, right? Expect to be shaken out. This is brutal for anybody, even in today's date with the information we have, right? The dissemination of information amongst retailers. And then trying to tell a retailer, hey, we could have big drawdowns and then double, triple moves higher and still be long into the end of this bubble. So what would be the rule would be what? Any big drawdowns, as long as we stay above the monthly trigger, we're adding to our position. If we go underneath the monthly trigger, we go full risk off. We don't do any adding. If we go back into 2 new highs on the monthly, we can jump back on again. And that you should expect volatility, and that you should expect major highs to the upside. You can get shaken out of this trade, right? If we're at the ass end of this. Does that make sense? So the last part of this would be if we're in a bubble, if everybody's in agreement we're in a bubble, everybody's in agreement. Some people were in disagreement saying the bubble has popped. We've heard that multiple times. But the S&P 500 is the stock market. The NASDAQ's in the S&P 500. So if you use the S&P 500 as a historical example, and we have 2 examples of it, we have 3 of them, believe it or not. Like you can go risk off with not adding. You know what I mean by that? Like if you're below the daily trigger, you can wait to add until you hit the weekly trigger. But you're not selling per se. Like we have like not adding. We have like I'm long the stock market for years and years and years and years. I'm waiting. Let's say we break under the daily trigger. We go to the monthly. I'm not selling my underlying. I'm just not buying until it hits the month or the weekly, or even potentially the monthly. Right. So I'm going to add if it shows that I can add on the daily, the weekly, and the monthly. And if we break down, you've been long for so much duration. Let me just show you this again really quick. If you're a well-disciplined trader, so here's 2000. If you're a well-disciplined trader and you're adding all the doom, add here. Oh, we're adding again. And keep adding. Don't get shaken out. Maybe I'm not adding until I see the turn. But then I start adding. Then I start adding. Then I start adding. And when we come up into here and we hit, holy shit, we actually bounced. You're given chances to get out. You're given chances to get out right in here. If you do this for duration, the worst problem that you have is you're cash rich. That's the worst problem you have. You take a few licks over here. I'm losing some money, bro. How much money? Well, I'm long from down here for duration. Well, go stand over there. The degenerate's going to lose money in here, but the non-degenerate that's buying and selling puts on major lows made a bunch of bank. And that trader, once we break underneath the monthly trigger, can look to short in major ways. And even if they're not going to short and this resolves, they're cash rich to buy the dip to go higher here or down here or whatever. While your individual stocks are getting hammered, while your pets.com is going bankrupt. And this is the craziest part is when the winners are picked, like that article I just read to you, the ass end of that article said, well, it'll all calm down and the winners of AI trade will rise up, right? That's over here. That's years later. 2003, 2004, right? So you're going to get another chance to get long yet again. And you get to pick them. Instead of doing this bubble trade where you're picking all like, oh, it's this one, it's that one, but then they're rotating in and out of them, you actually get to come back at the end of this, and a bunch of these companies are either gone or they're going to be $1 forever, and some of them live. Like the Amazons back then lived, right? Apple lived. So these stocks, you're given a second chance even with this up here. So you should not have fear here. You should be adding for these big prints. And you should be getting out only when we hit the monthly trigger. And then you have a bunch of choices. If it resolves and you can start adding again, you do it. You don't even have to short. You can just be cash rich. You can literally take your cash in that time period and stick it in bonds. You can send it over to another country. You can send it wherever you want. And if you ask yourself, how do we get to this last little leg right here? How we got here was the Dixie had an infusion of cash. The Asian financial crisis, they joined in. All monies from around the world came to the U.S. They knew that there was security in the build out of the first internet bubble, the Asian financial crisis. Dixie actually went up at the end with this. So there's a lot of contra, like, oh my God, the Dix is up. Oh my God, this move right here. Oh my God, we just went down to the monthly trigger. Literally didn't touch it. And there's big drawdowns and big draw ups, right? 10 down, 15 up, 30 down, 50 up, 20 down, 60 up. I mean, it's literally like that. It's like violence, violence, violence. Shake you out, shake you out, shake you out. And to be honest with you, there's probably some asshole in here trying to get long. I missed this whole move and getting long, and then you're the supply. They're telling you everything's going to be okay. Jim Cramer's telling you, get long, buy all this. He knew. It was underneath the monthly trigger. He knew. And then the meltdown happened. Same thing in here. And we should expect the same thing over here. We should expect at some point, whenever this is done, whether it's now, whether it's this summer, whether it's this fall, whether it's, any of those time periods, you see this come up and you start seeing this, see this prior low right here. Start seeing this come up here. This is September 17th. So we either need to be moving, don't we? Right? We either need to be moving through the summer, up, big, or we're stalling and we come down here. We actually hit that monthly, right? Or maybe it's a fake out, right? We just miss it and then we start ramming into the end of this year, right? Big ramps, right? 50% up move, right? To like what? 14,000? Not 14,000, but, like 7 and 7 is what? Or 7 and 35 is, 10? That sounds insane, doesn't it? We did that in the 90s. This is what we did right in the 90s. We did just like this. Went up, come down here, and it was like this. Straight vertical. Move this over here. No longs unless we get that new high. Got to be above this one right here. So my question to you is, in September, if we don't go below the monthly trigger, you have an example of it in the 1990s and 98 where we went all the way down there. We did the equal legs. Would you be fearful of a roll to the downside, or would you be adding for this last leg? And do you think that it's insane to even think about trading 10,000 or even higher? You figure half of it's slightly higher. We're at 72 right now, 7,200. So you got 35. You're adding 35 to that. So it's like almost 11,000. I don't think we go that high, but if we do, are you willing to go that high? Are you willing to stay on market to that price? That explosive, like rip everything off the shelves, throw it all in the cart, ride it all to the top, go literally fucking vertical. I don't know if everyone here is ready for that, or even the market is, or even retailers in general. I just don't think that they are. I think they'll be left behind. Still just waiting for this new high up here. I've been waiting for it since, I think, 11:30 in here. No beat of that prior high. Sent it down lower. No beat of that prior high again. Send it lower. Just need to get above this one. It's this one right here we're watching. You actually don't have to go that high. You only have to go, being a little aggressive there. It's this high right here. So this was from Goldman. Warns of crash risk spiking as market breadth plummets to dot-com bubble lows. I think this is something that plays out. This article is kind of good, but it plays out on a time frame that is likely much higher than traders expect. Or they're choosing not to read certain parts of these articles that say, yeah, it's 3 months for this, 6 months for that, it's 12 months for this. And that you should have a seatbelt on, but still be adding on all of these lows. And only if we break below the monthly trigger do you get to that questioning of, not questioning, but do we go risk off? The next one is not as good as it looks underneath the surface. Hold on, I want to know if I want to show you this or not. I don't want to show you that one. It's not worth it. Next one is market anxiety is rising again. Top Goldman trader sees narrowing rally amid ongoing molecule risks. Molecule meaning oil and other commodities. Market level anxiety is rising once again. According to top Goldman Sachs trader Lewis Miller, driven by an uncomfortable but forceful combination, a narrowing rally and ongoing molecule risks. What is the bull case from here? 4 things in Miller's view. Number 1, somehow the war ends and the Strait of Hormuz reopens. It's worth a 2 to 3.5% in SPX upside. Number 2, AI infrastructure theme continues to broaden out as lab ARR continues to grow exponentially. Number 3, AI matures and corporate America starts to profit, starting with the hyperscalers. Hyperscaler multiples only 13% premium to SPX. MSFT, AI biz, $37 billion. AWS margins, 40 BPS above the street estimates. Google Cloud margins of 600 BPS above. And then number 4, animal spirits kick in. Behind this, Miller, Goldman's head of custom equity baskets, highlights 5 key points. The market is back to trading themes, and narratives had a good week with our leading themes basket. EU themes of themes and the U.S. themes of themes. In our monthly rebalance earlier this week, the U.S. net, this was, by the way, this article was from Saturday as well. In our monthly rebalance earlier this week, the U.S. narrative model essentially doubled down on AI and semis, power, infrastructure, and memory, but has gotten cautious on housing, restaurants, and commercial real estate. Our model in Europe is long energy, security, shipping rates, and some AI capex, whereas the short leg is domestic Europe and UK consumer slices and the defensives that have been underperforming for a while already, like pharma medtech. I don't even think they're in season until the fall. AI and energy capex are two uncorrelated alpha trades we continue to like as longs. So the AI and energy capex trade. Market breadth is at one of the narrowest levels in decades, with slices of the AI infrastructure thematic dragging the index higher. As we discussed 2 weeks ago, narrow breadth can run for a while. Broadening equals war ending, corporate America profiting from AI. But it also becomes incrementally susceptible to sharp catch-up and catch-down episodes. Now, breadth can last as long time.
News 14. They say they're ready to return to
Ping tight here.
fighting in Iran and awaiting green light from the US.
I want to show you guys a couple things here. Market breadth is one of the lowest levels in decades, with slices of AI infrastructure thematic dragging the index higher, as we discussed 2 weeks ago. Narrow breadth can run for a while. Broaden equals war, ending corporate America profiting from AI, blah, blah, blah. But narrow breadth can last a long time in the late 1990s style market, with momentum positioning near all-time highs, 97th percentile, over 5 years, and worth being mindful of. We're doubling down on the case of thoughtful hedging. We think the best implementation of broad portfolio hedges, I'm not going to tell you that because it's stuff you guys can't trade. Mega cap tech earnings this week have reignited the debate around AI spend versus benefit. The group's relative valuation premium versus market is no longer significant. Our head of global research, James Covello, thinks it is enough. Skepticism around ROI and continuously upgraded AI capex. Meta not down 9.3% this week does create a relative value opportunity in hyperscalers versus semis. Also worth noting, equal weight semis have outperformed market cap weight semis by 19% in April, as folks find new beneficiaries across compute, inference, optical networking, and analog semis. One portfolio hedge worth considering is, if you agree with James's view, is outperformance options on hyperscalers over semis. So James doesn't think we're done, but he also says, hey, if you're looking for these legs higher, you should be looking for something that's underperformed the largest outperformers. On value versus growth, look for cheap relatives to commodities, rates, and PMIs, and we think value can outperform here. I disagree. Value never outperforms, but it's a safer bet. The hard asset trades is more akin to value than to secular growth. With 2026 shaping up to be all about bottlenecks, the refocus towards security of supply agendas should bolster the Halo rally, shaping up to be all about bottlenecks. The refocus towards security of supply agendas should bolster the Halo trade and Halo rally. It's value rather than secular growth, basically. For folks looking less at hard assets and more for software recovery trades, post the team's results, our software recovery basket is up 7% since mid-April and should provide portfolio diversification benefits as well. What do we mean by value versus growth? We don't mean the same thing as RLV, RLG, which is now AI versus AI. Also, come June, Amazon, Apple, Google will be part of the index value trade. When we construct baskets, only the growthiest and highest value names make it in, and we don't cut broad indices in half. We continue to expand our menu of energy security baskets with the latest launches in China and Korea. The China energy security rally should continue as policy support from the 5-year plan ramps and China solidifies its position as a leading clean energy exporter. This fits into the broader thematic national security agendas, where we're bullish U.S. strategic national interest and U.S. and EU power, global critical minerals, rare earths, and Japan economic security. With that being said, there is one group that has become especially vulnerable with high energy costs, which is the low-income consumer discretionary spending power. This is the bottom of the K-shape. This cohort tends to spend 4 times more in gasoline relative to other cohorts of U.S. households. Gasoline prices are at least 40% higher on average over the last 6 weeks, reaching as high as $6 per gallon in California just this week. Fertilizer costs are also driving higher prices for food and restaurants. This leads us to believe there could be surprises in the next few months of economic data coming from the low-income consumer level. Finally, Miller offers some protection.
Coming through with comments now saying no marked improvement in price outlook and argues for a hike. ECB's wait-and-see approach isn't hesitation. Longer war risks inflation staying elevated, and we stand ready to act at any time.
Given momentum positioning and near all-time highs, we favored limited loss protection in the short term. Medium-term momentum. For anyone looking to hedge momentum without shorting AI,
Putin announces temporary ceasefire in conflict with Ukraine.
look for indexes that are momentum-based without AI in them. I'm going to post a chart for you in the Discord. I'm going to just post this whole thing for you. There's a high-flying AI themes like memory and optical networking have high loading to momentum factor. I want to post that chart to you in here. Longer term, we think any more pronounced drawdowns in Momo winners can serve as a better entry point, assuming there's no fundamental change to the narrative.
Coming through more comments says, in a time of uncertainty and economic shocks, it's natural to see diverging views on the FMC.
So if you're seeing your stock like car getting taken down to the woodshed or Meta getting taken down to the woodshed, or your stock isn't moving, it is expected to move at some point and maybe outperform. You ever see like when Winky picks stocks, you'll have like, like one's racing up, one's racing up, one's racing up, and there's like one that is not following the plan. And they're just dragging, and then eventually they go whoop straight up like the rest. So you can kind of outperform, this stonk and this stonk right here. That makes any sense? Where we're gonna get above this white line right here.
Social saying that Iran has taken some shots at unrelated nations with respect to ship movement. So Trump says. He also says that Project Freedom, including a South Korean cargo ship, time for South Korea to come join the Iran mission. So again, Trump calling on South Korea to come and join the Iran mission.
Just waiting to see what the rest of this news is.
Trump also says in his Truth Social post that Hegseth and Joint Chief of Staff Kane will have a news conference tomorrow morning. And also Trump says no damage going through Hormuz other than South Korean ship.
There's the first target right here. If we can get it. Just need to be just above this one right here. SPX bouncing on its hourly trigger right now. Just waiting to see if we fail or not. I'm going to show you this real quick. Here's your hourly trigger. Just want to make sure what we don't do is we don't reject this. Don't want to be doing any rejecting up here, so I just want to watch this closely. Next bearish article. I mean, they really rolled them out this weekend. It was pretty wild. This is from Michael Miska, Bloomberg Markets live reporter and strategist. That means he works for the banks. A fresh wave of risks is gathering over equities after a powerful technical rally pushed markets close to record highs. As tailwinds fade, fundamentals alone are proving insufficient, especially without a swift resolution to the Iran conflict. Easy gains driven by systematic buying have faded, shifting the focus back to stock picking and fundamentals. Investors are becoming increasingly selective, while a reset in volatility is reinforcing the case for renewed hedging. That's because we bottomed out down below. By the way, we're up on that daily trigger now on VIX 9-day. We bottomed out at $13.50. So, of course, down there without the war ceasing.
There's been a huge shift in labor force growth in the U.S.
Without the SOH getting any resolution, the bears are like, well, if we're at 1350 and the shit's not ending, I want to see VIX mooning at 50 or whatever, right? 100. Easy gains driven by heavy systematic buying has faded, shifting the focus back to stock picking and fundamentals. Investors are becoming increasingly selective while the reset in volatility is reinforcing the case for renewed hedging. Quote, the technical story has grown more challenging and nuanced in recent weeks, says Goldman's trader Gail Hafif, adding that systematic demand has waned.
Fitzwilliam says job market break-even might range between 0 and 50,000 jobs per month now.
Jobs are going to rip your fucking faces off. I'm going to tell you right now. I don't know what that guy just said, but jobs are going to rip your faces off. Not in a bad way. Quote, the technical story is, here we go. Hold on. She's over here getting really bared up right now. The technical story has grown more challenging and nuanced in recent weeks, says Gail, adding that systematic demand has waned. Pension funds were sellers into the month end, while retail's tax refund fueled passive buying is set to abate. Quote, taken together, we think the market is set to let off steam in the near term, excising the froth accrued on the rally to all-time highs. I.e., I sold you calls at 725 and 720 and 730, and I don't want you to make me push my calls higher. The traders note that May is likely to see moderate tailwinds from corporate buybacks, while systematic strategies are more likely to become sellers of global stocks after a heavy releveraging. In addition, volatility indicates that investors have shifted from beta to actively picking winners and losers once again. And May is historically the biggest month of year for retail inflows. The bag holders. Volatility is sending a clear signal. Implied
The job market is holding up well so far.
Implied volatility at the S&P 500 level has largely reset, while single stock volatility remains elevated, suggesting investors are actively picking winners and losers rather than taking a broad market view. That spread is now in the 99th percentile on the 1 and 5 year time frame. There is some correlation here. I'll show you the correlation.
William says modestly weak jobs.
Trying to say to you is basically you're going to see more volatility on the index side of things. Let me show you this. Watch my cursor here. Do you see this black line right here? You see how it's going up, but it's volatile going up, like straight up bam, rocket, straight down, straight up, straight down.
William says job market
Whereas
well, but I'm not
it's just grinding on single stocks. A deluge of earnings reports have been digested positively by investors, with hyperscalers in particular providing a market boost. In the U.S., earnings for the S&P 500 are on track to gross 26% from a year earlier, roughly double analysts' preseason expectations. In Europe, growth is more subdued, but still outperforming forecasts, with earnings set to rise 4.9% year on year, consensus estimates of 2.6 according to Bloomberg Intelligence. Quote, we remain positive on equities, but the disruption to energy supplies caused by the Middle East conflict may persist longer than originally thought. This is in terms of Europe. April has been a strong month for global stocks, respecting the average trend, but if history is any guide, the next couple of months should be more muted. Buying pressure is set to fade without greater clarity on the impact of the oil shock on inflation and broader economy. Equity investors have been sanguine about the latest headlines.
William says long-term inflation expectations remain steady, which is encouraging.
We still don't have that first high. Be very careful here. Still no new high here. Do not mess with this just yet. Don't mess with that just yet. Equity investments.
Imbalanced job market is helping to contain inflation.
Equity investors have been sanguine about the latest headlines. The Iran war is far from over and talks are not looking productive, while the Federal Reserve sounded more hawkish than anticipated. Remember, though, that a more hawkish Fed is good for equities. If you don't know that, it is, even on knee-jerk reactions. Bottom line, despite some volatility, oil prices are hovering near this year's highs and bond yields are at 4.4%, with no move expected from the Fed over the next year. Quote, at some point you reach a point of no return where reopening the strait is too late to avoid shifting inflation interest rate expectations, says Chris Wiley's CIO, Connor Bradley. That is now probably a matter of weeks away. This realization could provide the pretext for the market to retest its lows. So if you look back on this final statement that they've got here, if you look back on what I showed you a few minutes ago about that double bottom near the monthly trigger, we have an example of that back in 1990. I'm gonna give it to you right here really quick. I'm gonna read it to you. Last time that happened was, if you want a reference point
Driven by tariffs is
for the original, if you want a reference point for that, it was the lows in August and October of 1998. So we ended up squeezing up into middle of July, like a normal year. So squeeze into middle of July. And then we come back for the lows of January 12th of 1998 and the lows of October 1997. And then we start to move higher yet again in September, October. We end up going straight vertical. We actually put on, you ready for this? From the low in September in 1998, we put on 69%. 70% of the low from September. Straight vertical. That's fucking insanity. If we follow, if we don't go below that monthly low or that monthly trigger come September, we get really close to it, but that's about it. So that's what she's saying. She's saying we could experience a bumpy road. she's saying the only thing that they're not saying is it could be, the low in September could be July was the high. Next up for Doom. I hate going through all this fucking Doom. Last, I'm going to just draw this in for you really quick. We can just do it from here. Does it matter where we draw it? Doesn't matter, does it? You have to hit that high. And you have to hit that high right here. Shit, I drew that wrong too. Go on here. You got to tick that one. You got to hold that one. You got to get above this one, and then you got to back test it right here. This is from Josh Harnett. This is one you want to pay attention to. Harnett, this event could open the door to Doom. I kid you not. This is what was released over this weekend. This was Sunday at 9 p.m. They laid on more Doom in the overnight on Sunday after several weeks of grueling attempts to fundamentally analyze the market, a market that just keeps going higher. As Harnett said it would be, it would at the lows in late March. We gotta turn this fucking guy off.
Voice news disconnected.
No matter the macro and geopolitical concerns, it is understandable that the latest Michael Harnett note, titled Boom Loop, is shorter. After all, what's the point of wasting too much time to explain or predict a market that just does its own thing, unbound by any tethers to reality? So what topics attracted the B of A chief strategist's truncated attention this past week? We start with one of the key macro updates of the past 7 days, U.S. GDP, which in the first quarter rose by 2%, of which 75% was AI investment. Harnett writes that nominal GDP is in the midst of a 75% boom in 7 years, from 20 trillion in 2020 to 35 trillion into 2027. I mean, look at this here. Look at this boom loop. GDP expected to literally moon. All that needs priced in, doesn't it? Yeah. I'd say yeah. What are you going to do? You can't have GDP going up and not market going up, right? Does that bring rage to you? How about inflation? How about inflation raging, a Fed that tries to fight it, and GDP cranking? Yeah? No? Make you angry? If you're a bear? Well, inflation is up 2% from 2010s to 4% in the 2020s. Growth from 2.5% to 2.75%. Stocks and commodities love nominal booms. Long the seas, that's commodities, chips, consumers in China. And bonds on the steeper curve. And the U.S. dollar, not so much. Hell, even if you long the dollar, it's likely money coming into the United States trying to build out the last part of AI, right? If your country is not going to be in the top creme of the crop, you might as well go into the winners, right? Who's going to win? China, U.S.? It's apparent, right? If you got to pick them, you pick what you think is going to be the winner, right? Most apparent winners. While inflation is up 2% in 2010s, I already told you that. Harnett next look at this week's Tale of the Tape, where understandably the main event is the ongoing boom loop as policymakers counter deglobalization, populism, and inequality. Let's look at this. Wall Street is on pace to surge to nearly 7 times the size of Main Street. U.S. private sector financial assets relative to GDP. I mean, this thing is expected to crank into 2027. All that needs priced in. You know, when the government was cutting money, Doge. Remember Doge came in and said they were doing all these cuts? Guess what they're doing? Guess what your government's doing? You know, the government you voted for that said they were going to make cuts in government? That didn't happen. They cut government. Guess where they're spending it? Defense. But it's being spent again. So this is the new bull market paradigm. Now, I know this is going to make a lot of you rage politically, but so these are all the things that are out. Supply, trade war, elitism, invisible hand, Fed independence, QE, boomers, humans, globalization, sanctions, open borders, U.S. exceptionalism, U.S. fiscal excess, Meg 7, private equity, populist capitalism, the U.S. dollar is out. And when you voted, you were told you weren't going to war. You were told that we were going to pay down all this debt, all this other shit, right? Doge was going to save the day. All that money was saved by the federal government. They didn't do that. They decided to spend it. They're now spending it on demand, the AI war, populism, visible fist, Fed deference, YCC, Gen Z, AI, national security, tariffs, border control, global rebalancing, AI CapEx, excess, micro cap, public equity, populist socialism, and gold. Whew. We should probably talk about gold. It's probably ready to start ripping again. New bull market. And look at how small this one is right now. Look at the boom here. Exit of Bretton Woods. Look at the internet build out. And we're still kind of low in the poll right now, aren't we? Still no new high here. Don't touch it. Do not touch that. Do not long that there. Still not done. Need to be above that white line. The only thing that breaks the 2020s boom loop, Harnett thinks, is a bond collapse. And speaking of bond collapse, Harnett concludes the note with this. Quote, the price is right, end quote section, where B of A strategist says that while 5% is the Maginot line for the 30-year treasury, take note on this at home, 5% is the Maginot line for the 30-year. So if you're looking for like some kind of, like Black Swan, you could go home, right? Open up a 30-year, and if you just snap a line on 5%, that's your Maginot line. So if you're looking for rates to be the catalyst, 5% 30-year bond. He does expect it to hold. That's because the Trump admin is on maneuvers to maintain the Treasury bid. FX supports for Asia, Middle East are owners of $3.8 trillion in treasuries and is key to reverse the deflation of Trump inflation approval. I would also point you towards so number one, you've got the U.S. stepping in, some kind of QE, right? It's not quite QE, but kind of. And then you've got something else happening here too, which he doesn't mention here, but if you go to Wolf Street and you look at his latest Treasury posts, we still have foreign demand. I know they're telling you that we're not going to have that foreign demand, but there's shockingly still foreign demand. So you have foreign demand, a mix of foreign demand, U.S. stepping in two different fashions. They can be the buyer of last resort. They can also just step in and start buying without you even knowing it, right? But should the 5% Maginot line break badly, booms, bubbles always end with sharp jumps in yields. Then the door to doom starts to open. Doom aside, here is what Harnett believes are the tactical buys and sells of May. Listen closely here, okay? This is an important one. This is for the upcoming month. All vulnerability overbought relative to the 50 and 200 DMA. So oil, semiconductors, Taiwan, and tech. Vulnerability that's oversold. China Tech, that's K-Web. Global Defense, that's Shield, SHLD. And healthcare, XLV. Bonds, ZROZ, all bounce on good news. Picking up where we left out last week, Harnett went on to say that the U.S. ISM manufacturing index is the best cyclical indicator. As it is set to surge from 53 to 60. That's bullish. ISM manufacturing poised to move higher. Within cyclicals, China, Europe, SPW, materials are better. May laggard longs to play stronger on ISM Japan, Korea, and emerging markets, excluding China. Semis have more than discounted the move. This is from the market air. Bull in being bearish. After April's face-ripping rally and pockets of excess creeping into parts of the market, it's only natural that the short case is back on the table. Our Bloomberg inbox certainly reflects that, filled with calls to sell now. But as we highlighted on Saturday, the positioning data we track doesn't support that view. If anything, it suggests investors are still far from fully committed. I'm going to show you a chart here showing this. Consolidated equity positioning still near zero. They're fearful here. You can see these series of higher lows here. They're fearful to have more equity exposure. But what is it showing? Squeeze potential, right? This is one of the best times of year for it, seasonally. Next up, we have CTAs. And even though CTAs had some for sale end of month, CTAs are here to buy on a flat tape. With the majority of CTA buying behind us, B of A data says that they will still buy in a flat tape. Systematic positioning risks is skewed towards buying again in median and up markets, while downside could bring selling. Systematic strategies could sell $58 billion in a down market, buy $33 billion if the markets are flat, and buy $18 billion in up market. So as of right now, you remember that white line that I've got here? I've got this white line right here. This would be a flat market right here. And not only that, even trading to like 7,000, still flat market. That's still considered flat by CTAs. So they will be dabbling and adding on any of this flat tape action. They're supportive. They're buyers here. And they'll continue to be buyers right down to the daily trigger. They still have buying to do. 33 billion if markets are flat and 18 billion on an up market in both scenarios. Most shorted stocks. So this morning I was telling you that I'm seeing spec growth moon today and still going up in a sideways tape. The most shorted outperformed last week. Let me show you this. So if you think the spec growth is done, if you think spec growth or memes are all done, this is the performance of the most shorted stocks relative to the Russell 2000. You can't short this because it has not squeezed. You need for this is not a squeeze. That's an equal leg up here. If this begins to squeeze, you can short it. Like up here. Up here. There's nothing to short. There is no squeeze in those stonks just yet. Not going to read this one to you. This guy's just a perma bear. He's laying out his case. I don't want to hear it from him. They're going to scream all the way to fuck to the top. They're going to be so fucking pissed. It's going to be so ugly when we go up there. It's going to be messy. He's calling the top right now, this guy. I'm not going to read it to you. He's like, I'm tired of it. He even says that in the article. I'm fucking tired. He's like, we're done. So the breath's been the worst it's ever been in history. It's not true. It's just false, patently false. Key events this week. I'm going to read this. I'll post this in the Discord right now. Where is this at? Is this it right here? Nope, that ain't it. Where the fuck did that thing get saved to? Where am I saving this to? No, I don't want to save there. I want to save here. Saving it at the wrong fucking place. Oh, you'll wear your Edmonds? You know, I owe you a meetup, don't I? I'm gonna have time to meet up with you. I think I'm there for like 5 fucking days, Das. If you can meet on that Monday or I think it's Thursday or Monday. I'll have to check the dates I'm going. I think I have like an early ass flight on Monday too. Or yeah, I'll ping you right now my itinerary. I get in like early the first day and then I leave late the last day. So we'll get together for like a full fucking day. You want to drive me to the airport? You want to bring me to the I'll pay the gas and the tolls and everything. All right, cool. Yeah, I'll wear my Edmonds. Those are nice shoes, man. Those are like those are dope. Those are like what do you call it? My I've got what do you call it over there too? Fuck are they like? Fuck are those boots? Oh, Iron Rangers. I have a sexy pair of Iron Rangers that those look like, but they're shoes, dress shoes. Fuck yeah. Yeah, I gotta go to JFK, I think. I think that's where my flight this time is, JFK. And I think I'm like stuck holding my dick on like the Monday or something before I come back. I'll see what my schedule is when I'm there, and I'll get with you. I owe you one, so I'm gonna take care of you. We can go out, take care of you real nice. Oh fuck yeah, those are good shoes. They're not the best shoes, but they're good like all around shoes. They're like Iron Rangers. They're better. There are better boots than Iron Rangers, but if you wanted the standard, it's probably an Iron Ranger. Allen Edmonds like some of my favorite like entry level shoes. I think they look nice. They're not quite like they're not like was that Cole Haan or whatever? Like they're not like they haven't been torn apart by VCs and PEs yet. So they're not like clunky and chunky. But they're not super sexy. They're kind of like right in the middle. It's like a nice shoe. It's one of my favorite like mid expensive men's shoes. I can't afford like the $600,000 shoes. I can't afford that shit. But like a one-time buy for life where you can get them resold and reworked on and stuff. I think it's probably my favorite shoe. Yeah, I did get lost in the city last time. Well, you know what happens is every time I go to the city, you know what? Like I was talking with a friend recently, and not soon, but this was like a few months ago. But we were discussing plans about New York, and it's one of the only places where I hate plans. It's New York City. Like you can make plans for New York City, but so much of what happens in New York is like quick, right? Half-hour trigger's coming down to cross the hourly trigger right now. New York's a weird thing. Like, it's hard to make plans because you get shuffled along wherever you go, and then something pops up, and there's this, and there's that, and there's like other people join you, and you're like, okay, we're doing this now. And then you're just like, okay, am I with the group or am I by myself? You know what I mean? I went to the marathon at one point, and like I blew out all my plans for that day or something. Like I had a bunch of other plans, and those didn't come through either. You know, I got like stuck on one side of the marathon. Then I was like, I got to go back to the hotel, and I like missed a couple meetings that I had in the city. Yeah, it is Rage Week, isn't it? I know. What else is going on that week? We got New York Tech Week, then we've got Blue Note Festival, and we've got Tribeca Film Fest is going on. It's probably the last. I was talking to Doug on it the other day. I was like, probably the last good weeks of summer for the city, right? Everybody. From what I remember, I haven't lived in New York in a long time. I don't know if it's the same anymore. When I lived in New York City, by the time 4th of July was getting close, it was like an exodus. Like everyone leaves from Memorial Day, but they come back. I always felt like 4th of July into August was like the slowest time in New York City. It was like the last hurrah was like June, middle of June, and then everybody vacates the city unless you're extremely poor. I shouldn't say that, but unless you're extremely poor, people try to literally flee the city for July. Oh, you'll be at Tribeca? Cool. I'm trying to get there. I spoke to a producer here that I live nearby here, a producer from Tribeca, and she's a big time like movie producer. I tried to get some VIP stuff. I haven't heard back from her yet though. Yeah, we'll have to hook up, a director if you're there. I'm gonna try to scooch in at least for a little bit. If I can get any kind of free time, I'll try to hit the Tribeca Film Fest. Are you showing anything there? Yeah, I'll fucking let you know. Definitely. It's sooner than later, right? Why are you going to be there? Is it networking for you? I do that networking stuff. Like, I went to, here's a card right here. I met with a bunch of like casting agents and just like sponsor agents in Park City. Probably going to do that in New York too. Oh no shit. Oh fuck yeah. Yeah, I'll be doing some of that too. I got to pitch the pilot for the show. I'll have the pilot finally. You see how we're not touching it? Do you see that shit? Do you guys see that right there? See these fucks? And not only that, I want you to buy the second one. I always like the second one better. I never liked the first one. See how we're not touching it? Like, you need to literally hit this one first, and preferably, I like the second one. I like the second buy as long as it holds. So just watch this second one right here. We ain't going nowhere. They're gonna try to keep us under this. This is intentional. That's why that line is there. See how we're like so close, right? All day long we've been sitting here. You live with Bobby De Niro and Tribeca? Fuck yeah. I'd like to meet him. I've never met him. I've never met Bobby De Niro. I've met a lot of fucking stars, and I've never met Bobby De Niro. Never met him. I've met a lot of people. Like I've probably met like maybe 500 movie stars, musicians, movie stars in my life, at least. And a lot of them with long conversations or hanging out multiple times. Because of where I lived. But a matter of fact, I had better success meeting movie stars and musicians living outside of LA than I did in LA. It was like a big no-no to meet movie stars when I lived in LA. But as soon as you get out of LA, wherever they go, they hang out. They're cool as fuck. If they feel safe and comfortable, you can meet them easily and do whatever you want with them. Hold on here. Let's see what this is happening here. I'm still long, by the way, for when I got Wednesday calls on here. Still do. I haven't sold them. If anyone wants to know, I'm still long for Wednesday. Yeah, I've never met him in real life. I've met a lot of stars, man. I've never met Robert De Niro. I always wonder, like, when people name they're like, ask me who have you met? And I'm like, name names, and I'll tell you who I've met and who I haven't. And surprisingly, I've never met him. And I've met some high-powered motherfuckers, and I've never met him. Biggest star I've met was probably Star, probably the biggest one. Maybe Oprah Winfrey. She's big. She's bigger than you think. She has an entourage. She has Ford planners. She's got everything. She's probably on par with like who's the black producer that makes the grandma movies or whatever. He's rich as fuck too. I never met him. Epstein, I think I could have met. I don't know. I've never met Epstein personally. I think that I probably have. He spent a lot of time in New Mexico, and I owned the best restaurants literally in New Mexico, one of them. So I've more than likely either been around him one way or another. I do know one of his, I know very, very well. I know someone that was on the Epstein list for potential interviews with the FBI. I'm not going to tell on the show who I knew, but I knew him very well. He worked for Epstein. He was interviewed twice by the FBI. He was chased down on socials. They ruined his life, and he knew nothing. He's a close personal friend. He knew nothing. His whole life imploded. He lost his wife too. He was married. He had people. He was being. He had like crazy people that were. I mean, I don't think that the Epstein stuff's crazy, but crazy people are around the Epstein files. And he was stalked. Still being stalked to today. Matter of fact, he's armed. He's never armed his entire life. He's got a license now to carry concealed. He's afraid of, like conspiracy theorists. Diddy, never met Diddy either. Nope, never met Diddy. Had to think about that. I've never met Diddy. I think I've potentially met Epstein, but I don't have any recollection of ever meeting him. He doesn't look familiar to me, but I wouldn't be shocked if he'd at least eaten in my restaurants at least once, if not many times. He owned them when I was there, or he was there when I owned them in New Mexico. I had places there, restaurants, all kinds of shit going on in New Mexico. Yeah, Tyler Perry is who I'm talking about. He's got huge money too. He's got big money. From what I've heard, he's got like, I do know people around Tyler Perry. I've never met him. I know one person. I have a close friend here. You guys know him too. He knows Tyler Perry through the guy. Like, it's not a fixer. I forget what they're called, but people like that. They have someone that plans everything for their lives, and he's friends with the person that does the planning for Tyler Perry. And everything I've always heard is stupid, like ridiculous. So 2 Chainz, I've partied with him. I have partied with 2 Chainz. Yep, I've partied with him. I just want to make sure I got 2 Chainz right. I've actually hung out with him. I have hung out with him. He's cool. I have hung out with him. I hung out with him at I met 2 Chainz at Meow Wolf, and I used to be much closer with him, but I'm not friends with him anymore. We've just gone different ways in life. But I used to like really be close with the founder of Meow Wolf back in the day. Actually owned a business that was associated with Meow Wolf at one time in my life too. I was involved with Meow Wolf. I have pictures of me there too. I have pictures of me involved with Meow Wolf. Yeah, he was doing a show at Meow Wolf, and I met up with him afterwards. And I never knew his music, and his music like comes off hard. But then he did this like anti gang shit, like hippie Wookiee kind of like dance set, and he reminded me a lot of like fuck, what was his name? Like, I think it wasn't Kwame. Like, LL Cool J went underground and did a bunch of rave shit in the 90s, and then Boy George did, and a bunch of rappers did in hip hop. DJs and MCs did a lot of DJ work in the rave scene, and he reminds me of that scene. The crossover, like a quiet party guy too, like with like Plur and all that kind of shit, but he was a cool guy. I have hung out and partied with him. And I think I saw 2 Chainz later in like a city. not him personally, but a show, and it was like a totally different vibe. There's our first high right there. Yay, finally. We're going to go up here and see this cross rail quick and see if we can get above it. Get back on track to the upside. There's the first high. VIX getting sold right now. Hourly trigger's coming up on VIX, though. Half-hour trigger's coming up on VIX. I might be trying to close the door on bulls here. They're trying to, even on a squeeze. Or we're going to do spot up pop, one or the other. I was trying to think if I. No, that didn't happen. He had an entourage with him too. It was all kids, like all not kids, but like like 18 to like 30 years old. He like picked up an entourage at Meow Wolf. It was cool. Climbing higher now, trying to break up higher here. That's the first high we needed. Yeah, he was really nice too. Despacito. He was really nice when I met him. He was really like a genuine good guy. Trying to think of anyone else that maybe was bigger. Bigger stars. Met Conan, talked to him for a while. He was cool as fuck. You know what? The weirdest person, two weirdest people, not weird. I don't want to say weirdest. Probably the two like most don't want fame people. One of them, I forget her name. She was from what did I what was her name? Naomi Rapace. She was very private. Naomi Rapace was probably one of the most private people I've ever met, and then Jodie Foster was one of the most private people I've ever met. Even I was in both situations. I was with people I knew that knew them, and they were quiet and like standoffish in the entire group. Naomi Rapace and what was the other one that I said? Jodie Foster. Biggest douchebag I ever met, Jared Leto. Biggest nightmare. Biggest nightmare would be Oprah Winfrey. Biggest douchebag, Jared Leto. Biggest douchebag musician. Ready? I shouldn't say this. I'll name him. What the fuck's his name? He's the real cocksucker. What the fuck was that band's name? The Killers, maybe? I think it was the Killers. Let me just check. Yeah, it was these motherfuckers right here. The band was cool. Ronnie Vanucci Jr. If you're out there, go fuck yourself. You're lucky your boys saved your ass. If I ever see you anywhere, we're gonna have words. Ronnie Vanucci, I think he's the drummer. I can't be sure if he's the drummer, but he's one of the biggest musician cocksuckers I've ever met in my entire life. You're lucky your wife wasn't there. Would have taken her from you. Literally would have done that to him just to fucking prove a point. Ronnie Vanucci or something his name is. Shouldn't say that shit. It's been a long time. He's probably an old fucking man now. The Killers is a great band too. Like I don't want that one guy to like shit on the Killers. They're a great band. They actually do really nice stuff for people. Oh, you know what? Some other fucking weirdos I used to know. I got all kinds of fucked up shit. The dude that went to prison. Danny. Remember that '70s show? All the fucking the gang of dudes. They used to hang out. They stood in a bar in Park. Well, they were seated at a bar in Park City. And I was never friends with those guys. They're all Scientologists and stuff. I was never down with those dudes. Danny fucking Masterson. That's right. That's the guy. I never knew him. I was never. I never liked Scientology shit. So I always thought they were too fucking weird for me. I never got along with. I just never got on with those guys. Never tried to. They were always around me, but I never knew them. I always heard sketchy shit, so I just stayed away. Always heard sketchy shit about Danny Masterson and his whole crew. Whole fucking crew. He had a crew of like 5 to 7 guys that would always be around. Yeah, no. That guy's got bones all over Park City. Everybody knows who they are. They can fuck right off to those guys. Yeah. You just go where they hang out. They'll tell you everything. Those guys tried being like big fish, small pond and shit when PC was a small town. Hamtown, baby. Fuck yeah, Hamtown, baby. Yeah, Hamtown's but Motown. I know Hamtown's Motown. Fuck yeah, Motown. I don't know anyone in Detroit. I'm not from Detroit, so like I know people in Detroit, but I don't know people in Detroit like I've known people in other places. I do meet people in Detroit. I've been meeting a lot of people too. I should say that. I have been meeting people in Detroit. But Detroit's its own thing. Like, Detroit's not an easy place to break into. I made a rule when I moved here that I wasn't going to, or I was unwilling to be the like great white savior. Like, not that I would be successful at it either. I just didn't want to be that person. I always felt like Detroit was the kind of place where other people had their own dreams, and if I could help them with their dreams, I'd be happier. And that's been my mission since I've been here. If you ask anyone that knows me here in Detroit, I'm all about them and not me. When I'm on public, I don't tell anybody who I am. Normally, it's someone else telling people hit this guy here. I keep a very low profile in Detroit. I feel like I'd be stealing or something. I'm here to like help Detroit, like any way that I can for their dreams. Truthfully, and I do that with people here in Detroit all the time. Never like wanted to be like a lot of people move to these places like people who move to places like Detroit when they're coming back, and they try to be like the great. And it's not great white either. It's just like great savior, and you don't want to be that. These people, like Detroiters, have been through so much shit. All they've had is their dreams for all these years. So you find out what they want to do, and you try to support them in what they're doing. And I've had way more success with friendships here doing that, like huge lifelong friends I've made. And I'll never pass that up for anything. You get the one high right here. Don't buy this. Just let it be. You want to buy the second one, just let it be. Don't touch it. Don't get long hair. Don't touch it. Not worth it. Just be cool. GME had the nice downstroke to check the $23. I like the long off that $23 that just bounced on. Looks like they hit that low down there on the monthly and weekly trigger crossover on GME. Yeah, I do. I've got him here, Super Gal. I have him on this sheet, this paper here. I got to post them to you in the Discord. I'm gonna post them. I have like the most shorted stocks. If you look at what I posted above this morning, that's all the movers right now. And I have another list here for you if you want them. I'm not want them. I will post them. I just have to print all these things and post them in the Discord. I'll do it on a break. Let me just a quick break here. I've been sitting here with you guys since 9:30. I gotta go potty. I need a 5-minute break here. I just went through a whole list of shit. I will post this for you here. You want this right now for sure. Hold on here. I'm falling behind here. Fucking dicking around over here. Do this one first. Unless I already posted it. You want to read this? This is all the upcoming stuff for the week. Key events for the week. And then I'll get you. I have the list here. I was just looking at it. I didn't show it on the stream. I said, I'm not showing this here, but I'll post it. It's all the most shorted stuff. All the baskets that everybody's rotating into, I've got them. Don't buy this either. Don't buy any of this shit. This is a trap. Don't fuck with this. You need to be above this up here. You need the second high. Don't fuck with this just yet. I'll give you a 5-minute break here. I'll be right back with you guys. Just watch for this second high bump up here. I'm going to leave this right here. I'm just going to go potty really quick. I got to stand up. I'm like dying here. I just need 5 minutes. I'll put the news squawker back on as well. We'll get into some of these earnings and try to get the rest of the month's bullshit out of the way. Hold on here. I'll be right back. Give me like 5 minutes. If we stay late, I know last week my voice killed me. But we got to get through this, even if it hurts my throat. Even if it takes after the bell, we have to get through some of this stuff. We have shit to go over today. It's a new month. It's gonna be like 5 minutes here. Nasties, huh? Look at that. Another trap in here. Failure to get that second new high to buy. Hopefully none of you bought that one right there, or else you're getting hammered right now. Hold on, I want to lift a few more weights. Hold on a second here. All right, I'm back. You got to remember, I got to get ready for the summer here. I've got a sailing season coming up. And I'm serious. Like, I got to grow my hair long. I got to grow my hair long, bro. I got to get ready for for the summer buff months. Still dragging here. They're trying to set up they're trying to stop the market from going up here. You can see it, it's clear as day. I they still haven't lost it yet though, so hang tight here. Okay, so we got through most of that doom, right? We got through I don't think I need to read anything else to you. Hedge funds aren't buying. This melt up is another one. I'm not going to read the rest of it to you. We already know that the bears are pissed off. We already know that we're looking for a low for the month of May. I'm not going to read this next one to you. It's more donkey diarrhea. Time is it right now? 2:30. I got to give an outlook, and then I got to go through the earnings stuff to get us caught up for the month. We're still in line on this 7,200 right now. We're at 7,248, and we should scream up into the bell because we've got another magnet above at 721. Was it 7,215? I think is the next magnet. So we should start ripping here in just a minute. Hang tight here. We're going to do outlook for the day. Shit, I need to go to the bottom right. Let's look at this. So we've been stalling down here, right? Failure to launch. We came up. We knew that this was resistance right here. We had a pin at 7,200, which I believe was right here. And that, no, 7,215. 7,215.
NYMEX WTI crude June future settled at $106.
Sorry, excuse me on this. Hold on here.
$4.48 or 4.39%. Natural gas June
Hang tight here.
at around $2.86. Gasoline June futures around $3.73. Diesel June futures around $4.07.
We knew about this one right here, but then we've got another target higher, which is at 7,250. So we reject this originally, and then 7,250 is where. Hold on here. $7,250 is at Friday at 2 p.m. Somewhere right here on SPY. Nope, hold on here. So we came up here. This is how it went, just like this. We got the wrong place here. We were up here, right? We come up here. We knew that this was a place of rejection. The 7,200, which is right where we are. This was the magnet for the downside. This was the magnet for the upside. And that turns into sell, right? We magnet this one. And then we should break above this one next, but we've been stalling here all day long. I mean, we've been stalling here from where? This is 11, this is 12. They bought this.
If the UAE takes unwise
So let's watch this closely.
all of its interest will become Iran's.
I gotta turn that shit off. I can't listen to him when he's doing this diarrhea. I really can't. He just he really gets on my nerves. Right here, 9 o'clock. There's 10. So they tried to buy this at 10 a.m. And they were buying this at noontime. So buy here, buy here. And what we're trying, or what looks like what the market's trying to do is shut the door here in the close. Like the market's trying to stop it from going up, right? See this? So they're trying to tell you that, let's see if I can go make this larger here. Have the dip buyers here at 10. We know that there was resistance up here already. Let me just show it on a different way to show you this. Hold on here. So see how we came up here? We say, maybe big call wall will send us lower. We'll hit this one. We'll go up here and get above it, right? That's the thesis. But if we come into this close, we have our first low. If we slip under here in the close, that's not good, right? Tuesday becomes a down day. It gets really messy to the downside here, early week, right? That makes any sense? What I want to watch here closely is this close. The reason I'm bringing this up is because we want to watch the close. And I'll explain to you why here in a minute. So here is 1600, 4 p.m. We encounter this frequently. It's a bear trap, not a bull trap, excuse me. This can turn into a bull trap, but what you want to watch into this close is they'll fake out either up or down right at 4 p.m. And they're going to try to fake it out. So what they'll do is they'll make this look really ugly down here. And then right at the last minute, they'll skate this up. And then we'll be out of here. And oftentimes, if we're going down, what you'll see is a move higher. And they'll suck it right back down because you failed to get the new high into the close. And they'll suck this down like right at 4. You'll get a new low like right after the bell. If you don't know what I'm talking about here, this is a normal setup on Mondays where they're trying to hide where they want the market to go here. But from this morning at 10, they did buy this. And at 12, they bought this. So I think that we're just in a fake out where we're going to come down here and then they're going to let it up. And before you even get there, it'll start running is what I think is going to happen. But let's go back here and look at this for a minute. You can see for sure on Friday they're trying to clean out. You've got the clean out on Friday, and then you've got the Thursday low down here. Just show you this. This is the Thursday low. Where are we at? What the fuck's going on here? Just look at this. This is the Thursday low right here. I think I already had these on the chart earlier. I want to see that. You see this right here? They were higher than that one right there. This was pre-markets. This is a fake wick. Stop that. That ain't real. So your first one is this one right here. We would need to see this slip underneath, right? And then it's party time to the downside. Clean out Thursday. This weekly is not a good start here. No new high on Monday. This is a weekly calendar or weekly time frame, by the way. Hold on here. This is a daily. Do you see this? There's still buyers here. You see it? No new low. We had a low earlier. That's not good. See it right here on the daily? So this candle has not been taken out yet. I want you to look at this closely with me. You see this? So this one right here. They missed the low. They tried to get it. They missed it by a tick, couple ticks. They're trying to get the second low in here now so they can take this out. Week's still intact theoretically. That's not good. I don't like seeing this on a Monday. We already kind of know, right? Hold on here. Keep this one right here. This is important level. There's also this one right here. This is the next white line that needs taken out right here. 712.24 needs taken out. We already did the 718, so that one's already been taken out. So 712 is the next one. There's a 4-hour basis now. That makes sense right here. You see this candle right here? There's also a, let me just write 4 on this. I think that's 4. No, that's not 4. Day right there. And then this is where things get lost. We just don't know if we're going to get the sweep into the close. The close is going to be where the close, I think, is going to be where the fake out is going to be. The manipulation comes in at the close today. And this is bad right here. That's bad. We expected this move lower here. Said don't be long there, right? But we didn't expect it to be this deep. We didn't expect it to be this deep at all. They're trying to get this one and this one is what they're trying for. Hold on here. I'm trying to erase all this. They want this whole cup and handle right here. Do you see it? They want this one right here, which they got. They want another one down there. That's your 2. And then up here, stop the whole thing, and then straight down. There's your W. And this is farther end of the week, Friday. They're making good progress right now. It doesn't. This looks like they're afraid they don't have enough time here. Let me just check velocity really quick. It was looking pretty good earlier. No, not so much. That's looking pretty bad. If there's any good news in here, it looks closer to bottom than it looks. You can see right here that even if you were to go this deep, it's just a matter of this bullshit right in here. Yep, hold on there. VIX, man, is not looking like it's being cooperative here. I want to wait till the close to give you an outlook because this could swoop higher here. Like this pain trade could last into the close and then immediately come up here. And it's literally like vertical. It's like this. So the only reason I don't want to give you an outlook right now is because there can be a fake out in here and then we start ripping faces. This is a hard call. No outlook until 4 p.m. I want to wait because there's a trap in here for bears. I know it doesn't look like it. There's one, there's two. It's looking like this right now, but it could be fake. It looks like this right here. 1, 2, 3, 4. This is the third one down here. There's like this move right here, but it's not validated yet. So no, you don't get that as the outlook just yet. I want to see where this actually closes. Let's go back here. I'm not giving you an outlook yet. I know it's end of the day, but I'm not. I want to watch what this price action is after the bell. Because it could be before or after the bell. So what they'll do is they'll like make it look really fucking bad and then straight up here. And bear fucked. So I don't want that to happen in here in this close. Even though this was even though this was a trap in here, which we already saw coming. Just gonna leave this right here, and I'm gonna do this one right in here. We're gonna watch this closely. We should know before the closing bell, and then I'll give you the outlook for tomorrow. I'll change it if I need to. They're trying to sell this like hard. You know what's fascinating about this is they're doing this really fast. Like they don't have enough time. Like they need to make progress as quickly as possible on anything they're selling here. So just keep an eye on this. We'll just keep watching this closely here. I shouldn't draw this like this, but I'm drawing this because I want to see if the trap is here for the sellers, which I think it is. We'll watch it closely here. They did check this before. Just be aware of a huge ramp up here. Like it's big. Like it should be fucking huge. The only thing that gives me pause on this is VIX 9-day is poised for a bloody, for some fucking blood. Maybe some kind of news we haven't seen. We want to watch this very closely into the close here. Should be like Rampo-Rama. If no Rampo-Rama, we'll see what happens. We'll see. If the close is like bloody down here, I'm willing to want to see that through to the downside, but this is an old fucking trick in here. I've seen this too many goddamn times. Usually at the start of a week. It's usually on like a Monday or Tuesday. They'll freak you out. All this doom in here. Okay. Last one for the day. This is earnings after the bell today. We have Palantir, Transocean, On Semi, Duolingo, BWXT, Fabrinet, Grab, Pinterest, Sterling, Voyager. On open tomorrow, we have Shopify, PayPal, Energy Transfer, Pfizer, the other Fiserv, Cipher Mining, KKR, DigitalOcean, Ocular, and Marathon. And then after the close on Tuesday, we get AMD, Lumentum, Supermicro, Arista, AMC, Astra Labs, Hecla, Strategy, Navitas, Tempest. On Wednesday, we get Walt Disney in the morning before the open. We get Novo Nordisk, Hut 8, Kraft Heinz, Uber, CVS Health, Avotech, Amcor, Carter's, Cenovus. And then after the close on Wednesday, we get Coherent, IONQ, Exxon, ARM, AppLovin, Dutch Brothers, Fastly, Snap, Beyond Meat, Able, Marl. On Thursday before the open, we get ACM, Arco, Blackstone, Secured Lending, Celsius, Datadog, McDonald's, Black Sky, 1-800-Flowers, iDance, Planet Fitness. Then after the bell on Thursday, we get IREN, CoreWeave, AOI, Open Door, Coinbase, Affirm, Mercado Libre, SoundHound, Rocket Lab, Red Cat. And then on Friday, we get Wendy's. Get back on the fucking fryer. First Dibs, TerraWolf, Doc, Enbridge, AirSculpt, Algonquin, AMC Networks, Arbor, and Array. Still a pretty fucking thick stack here for the rest of this week. This thing working or what? Close that, close that. And we get, what's the last one here? It's good, 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 good. Sorry, I gotta move some of this stuff here. Okay. Get this right here. Sorry, I gotta get some triggers and stuff on the screen. Watch this closely in this bell. We're either gonna sneak underneath or we're gonna sneak up. It's gonna be one or the other. Okay, I'm going to go through these really quick in the background. I think we already did Palantir. Palantir has a cross of its, go back to a 30-minute here. Bullish on Palantir after the bell. Would like to see a quick retrace to 143 and then the move higher on PLTR. Probably catch it after the bell. But I am bullish on PLTR. Bullish on RIG, RIG, that's after the bell. They kind of have a drop setup too, or a flush for halfback trade to like 640. I'd like to see RIG go to 640. I don't know if they can, or maybe even go down and sweep 613. I do not like on. I like them to sell. They have some. I either like them to sell or I like to sell on a high on them. One or the other. They are topping right now. If they squeeze after the close on ON, I think it's to sell. They're going to take the money away from you. I don't think you wake up with it on a high. Our old friend Duolingo. They're already turning up. I really like Duolingo here. Duolingo looks like it wants to come back down like $105. Backtest and trade 150. Trade the halfback trade. I do like Duolingo here. So far, it's probably my favorite after the bell. BWXT. I like BWXT after the bell. So in order, so far, I'll put them in top 3 so far. Duolingo, BWXT. ON is to sell on a high. If you even get it. If you're a short seller, look for a high to sell on if you can. You see any highs after the bell on them. RIG, I'm bullish, but I want a dip. Palantir, bullish. I think you're going to get some funny business where it moves after the bell, but ultimately bullish. Funny business. Watch out for Palantir and funny business. Excuse me. Fabrinet, I like them on a, excuse me. God. Hold on here. I got to drink some water. Fabrinet, I like them as a short to get long later. FN, they're trading 724.35. They look great, but I think that they dump on you. You're going to come back for that low to get long, though. I'm not bearish on Fabrinet. I just don't like this. I don't like the setup. Keep an eye on FN. If they are bearish on their earnings, if they get sold after the bell, look to long that company. You're hoping for a downstroke. Grab, don't know enough about it to say anything on it. Pins. Yeah, Pins has the same setup as not really the same setup as the others. Pins should go up, but only to go down. They're at $20.47. They're trying to close gaps up there, but I think you get a delayed move on them. This one kind of sucks. I can show it to you really quick what I mean by it, but if you've got triggers, you can see this. I'll go back and chart this for you before the close, but here's a prime example or an example. Like up here, then down, then you finally get cut loose over here. And this could be like an equal leg. You know, it's like you want to escape this up here, all this beautiful escape on pins. This could be like dragged out and then up. And you're still underneath the monthly trigger, so you know, like oh, I want to see higher than that. And then I want to see like down here. Then I want to I don't want to join in then this unless we're up there. I don't like that at all. Is there a better trade than pins? STRL. I don't like this one either. Like STLR is like Fabrinet. Looks like it's to sell on a squeeze. I think I can easily justify this going up on its earnings, but will you wake up with money tomorrow? Probably not. They'll be taking profit up there. I kind of like Voyager. That'd probably be my number 3 right now. So for reports today, if I have my favorites for longs, VOYG. No, number 1 is Duo, DUOL. Next one is BWXT. Next one is VOYG. Those are my 3 favorites. We'll look at Duo really quick. See why I like that one. And then we're going to look at some more for tomorrow and make this as quickly as possible before we get to 4 p.m. So here's Duos. Now, if they're not reporting, I don't know it. I might have misinformation, but I've got them as reporting right now after the bell on Monday, okay? So if I missed something or if they've already reported early and they got the times wrong or whatever, I only like this stonk because it's at $100. And even if you're going to short this, they can go all the way up here for a reset. So even if they hold this in right here, let's call that like, fuck you, it's closed. We're going down below 100. I like that, but I do like the idea of buying flows in here, taking your shirt off, and then looking for a larger move down. So just on close, I like the idea of this. Now this is on a 30-minute basis, and this is, you know, May, June, so up. It's going to take you all summer to get up here, more than likely. Make sense? There's Duo. It's one of my favorites right now. You got a nice turn up right here. BWXT. I like how low this one is here. I like the only thing that I don't like about this is, if I had anything that I don't like about this one, it's not on a low on hourly. We're losing the daily velocity over here. It's the only hesitation I have on this one is looks like it took a lot of work to fight its way up there. And here's a couple other earnings here. Do you see how this kind of like stalled, squeezed up? I like that. Let's go back and look in 2025 in April. This fucking thing mooned. And you see this dump and then rip here? That's my one fear on this stock, is this here. This is my number 2. But the one thing that bugs me about it is I don't know what options are here. And you see this low right here, and see where these guys are right here? Like these guys are down here. So they're like happily waiting down here. My big fear is that it's gonna whipsaw down, and then you're gonna be let out. So you get the 1, 2. This would be 3, and this would be 4 down here. They could like trap you in down here. This is BWXT. It's probably I think Duo is probably my favorite. I don't really like a lot of the reports today. I'll be honest with you. Like in terms of like, hey, they can see this. I'm not seeing it. So we'll look at let's quickly look at Shopify, PayPal, AMD, Supermicro. If we can get to like AMC and A-Lab, we will. I'll try to blow through these really quickly with you. I'll just give you some broad strokes here. I like this one a lot. I like this volatility. It's got some of the same issues with just double bottoming over here. There's one. I like the idea of that and that. I like the idea of closing all that in there, but that's still May, June. I like Shopify. For tomorrow, they report tomorrow morning before the open. Oh, what am I doing here? PayPal closed their gap there. I like PayPal too. Let me just check something here in this PayPal. They're being bought on weekly. That's good. Their daily's a little long in the tooth. Their daily's a little long in the tooth. What it's trying to say is that there could be like a this then sweep then higher like this. Up, down, then up. The daily is really struggling here. The reason it looks like this is because I don't think the back test would survive. So like you have not taken that high out. You have not taken this high out. So even if you get up there, and there's a back test to go higher, I think it fails. Flushes you, closes that gap, and then it goes up. Look at AMD next. This is tomorrow after the bell. Jesus Christ. We already know what that's going to do, right? This shit's all coming back. That's AMD. This is Tuesday after the bell. You want a real reason to sell right here. You want a reason to sell Wednesday and Thursday? This is all you need to see. I don't need to show you anything else, do I? You know what AMD is going to look like, right? 1, 2, right? This is 3, 4 down here on tonight, and then straight fuck down. And they tease this to you on their earnings tomorrow. They're gonna tease you on your earnings, right? And then they're gonna fucking hammer you tomorrow, I think. It's something just like this, and then down. That's gonna be a sweet short. I'm sure that the target on this is 400. That's the tease. Yeah. AMD, no. There's 382.5 up here. You know, even if you get this like 382.5, it's to sell. Even if you're coming into this close and you're getting a lot of these stocks are like this, like you think you're going to catch this after the bell tomorrow, and you know what they're going to do? As soon as they hit that 382.5, they're going to take the money and run. You could get that squeeze up here, but I don't think they're going to hold. I don't think there's any buyer up here. That's AMD. Super Micro. I like this one, kinda. I like this one. I like SMCI more than I like. You see this right here? That's kind of the same setup as the other one we looked at, right? Was that PayPal maybe? It was either PayPal or Shopify had the same thing going on. See how they come up here, they close the gap, and they like fuck around with you. And then you get, this is all options bullshit, you know, or like, you know, hit the thing, got to come back down, but then like you're up here taking this one out, and you're like right back down again over here. Just hang tight here. I like this stock. I like Super Micro. If you wanted like a one that can break out, probably Super Micro. They don't report until tomorrow after the bell, but I like them. I like that they've been down for a period of time. They haven't enjoyed anything. Like Super Micro has joined in none of this. They've joined in none of the recovery. 1, 2, 3, 4. That's done. This correction is done theoretically. 1, 2, 3, 4. I like Super Micro here. It isn't a bear market right now, but it's been in and out of one for a period of time now. I do like it. Let me just check this really quick. Might be my favorite I've liked so far. This blue is bad. There's no new lows in weekly. That's bad. I can see why people hate Super Micro right now. Just look at it like this. Yeah, these guys came in and back here and bought this, though. You see that shit right there? They bought that, took it all the way up. They're trying to buy this. I like that right there. If there's anything that I like, it's that. They're on the 6 month right here. Let me just check the 6 month. This could be just an accumulator too. I got to start thinking about this stock. I like this on a breakout, and I like this on a an accumulation here. If anyone's been accumulating this, good job. There might be more lows in here. It's showing all this stuff needs cleaned up at $2. Like probably a bunch of bears saying it's going at $2, but I'm not so sure. Like if you're able to wipe these guys out, it's gonna. If you're able to take these guys out up here, it brings in a whole nother question. Maybe it's overdone a little bit. I like SMCI tomorrow. This might be my favorite stock I've looked at. Let me just check a couple others in here. AMC. Oh, you're getting no love on AMC, huh? Whenever all eyes are on GME. Looks like you got the same bounce as GME. You might want to use this one as the you might want to use AMC as the reason to or when to buy GME. I like them all the way down here. Close that gap, then up. A low of $1. Woo! Corporate takeover. Pink sheets. AMC. That's got to be hurting as an AMC bull. It'll never go below $1. There it is. Right there. Oh, man. I haven't looked at AMC in a dog's age. A-Lab. It's an old-timey favorite of ours. These guys always do well. Look at this. This is their earnings right here. They did follow their trend here. Here's another earnings in March. They kept going down in trend. I can see the equal legs up here. Still want to buy lower on this one. I still like the idea of buying these guys lower. A-Lab's the kind of company where you only buy them on lows. It's a good spec growth company, but you can see it right here. Always like buying these guys on lows. They're arguing that they're going to put in a new high up here, much higher. You guys remember when we're selling? Remember when we were buying A-Lab? $30. Trying to trade 320, if not higher. Anybody remember A-Lab? No, just me. But you know that's a long ways away up here. That's months and months and months and months and months too. We've already taken that one out right there. One. Oh, you already took that one out. That's one. Wait a minute, this is wrong. That's wrong. Something like that. You might get an extension on this here. Something like that. Be careful of A-Lab. They don't need to do this right now. Like A-Lab could easily blast down here, hit that high, then come back down again, believe it or not. It's like pounding this whole thing. You just want to be an accumulator on this for summer print. Price targeting in middle of summer, 260, 280, somewhere in there. Walt Disney. This is on the open before Wednesday. Let's just check out Diz. I'm not seeing anything too compelling here. I don't like this one either. Like, I don't see anything too compelling here. This has been fairly consistent. Up, down, up, down, up. I want to see down. Like, I just want to see Disney down here, right? Right there. And then away. Low, lower low. Finally get the inverse head and shoulders in here. And then up into summertime over here. This could likely drop quick like this. A little bit cleaner maybe. Like down. Wednesday earnings down. And then up into July. And I like this back down again. In September. And then a nice strong finish to the end of the year. I don't think you get out for this until end of the year. That's going to be a big up. This is going to be a big move up. I want to Disney. So just a note on Disney here. I like Disney. I don't know if you get the print right now, but I want you to just look at it like this. See all this stuff moving up here? See this moving up right here? If you can jump on this train anywhere, if you're offered any entry in this. This thing is this is corkscrewing. You see it? It's ready to fucking explode. I like Disney. Any kind of doom on Disney, buy. And they gave up their 2020 lows right here. It's the mouse. Don't ever fuck with the mouse. Please don't fuck with the mouse. I'm being serious. This is all this like grinding in here and back and forth and corkscrewing. This is gonna explode to the upside at some point. There's Disney. I like Disney. Uber, CVS. Look at both of those. They're trying to crater this here. They're trying to get this down here. A little bit more bearish on this one. Looks like they want to do something like this. And then up. This is still giving it up. Uber's going down the shitter. I bet they're going to reprice Uber for self-driving. There is some squeeze potential in here. These are hard to navigate. You have a low, you have a new low. Failure to get a new high, that's all bearish. But it's still locked in this like we don't know where we're going trade. So I don't like this necessarily. I want something cleaner. I'm not finding it. Like even the good looking stocks like this CVS looks good, but it's looking for, even if you're up here hitting this thing, you close that gap, still down, and then finally goes up. Well, there's a lot of stocks right now that look like this that are reporting this week. Like up and then down, fuck you, and then we get out of here. There's a lot of stocks that is better to watch for pullbacks on ER this week, this early week. Anything that fails, you want to be watching. IONQ and ARM are after the close on Wednesday. There's some good reports on Wednesday. IONQ. I'm looking for something that's like an easy no-brainer. I like IONQ might be the best I've seen all week. I like this one a lot. This is great. IONQ is going to go up and trade the equal leg up here. The only thing that's garbage down here is this stuff. Like when you look at this stuff like this, it's like, this is a prime example. This is IONQ, right? This is bullish. You're hoping, if you're a bull, you're hoping for a bloodbath. You're hoping for like, recheck the cross of the daily, flush it down, and then you're able to buy that leg right there. This is the story this week. It was more clear last week and the week before. This week in particular, fucking Christ. Hold on here. I'm getting manhandled by my chair wants to get stuck on a leg on a desk. See this right here? Like this is a prime example of like opportunity. It might squeeze up, but you're hoping for a bloodbath to buy. Right down here, and you're buying this right here. There's a lot of those stocks right now this week that are reporting. ARM. You know, this one right here doesn't look too good. This is ARM, right? Back and forth, back and forth, back and forth. Big squeeze up. What do you want to do here? Like, where are these guys? These guys are down here. And this is a topping pattern. It can put in a high. Like it can go up here and hit another high, but I still want to be buying this down here. I just want the chance on a binary event to get long on this stuff. This trade's already taken place. There's a big giant gap down here. Here's their ER. Like I want to see this right here. I'll be honest with you. I want to see that right there. Like I don't care that you're going up there. I want it to blast straight down so I can buy it. That's where these guys are. These guys are way down here. You could argue that they're down over here. I mean, I don't think we're going to get down there, but that's where I want to be a buyer, down here, somewhere down there. A lot of these are like big time chasers. Like here's Wednesday when they report. You got the low, you got the higher low. So like wham back up here, wham back up here. Maybe you get the new high, but then it's like take the money and run. Or they just kill you right in here. You don't get the second leg. It's just 1, 2, 3, and then it's straight down. Buying the daily trigger over here. There's your 1, 2, then the third one will be a breakout here, and then you'll finally get out up there. These are all offering like, this is another one. It's like, it's better to have 10 of these. Like I just looked at like 20 or 30 stocks. There's a fuck ton of them that are like, oh yeah, if any of these fail in here, I want to buy them. Just look at a couple others here. Bros. This might be my favorite one. This is Dutch Bros. This one's probably the best I've seen yet. Of all of them that don't have to clean up anything, I don't care about this down here. It's probably the best one here. Dutch Bros has a 1, a 2, a 3, and then up. 1, 2, 3 at worst case scenario, and then up. This is BROS. It's probably my favorite so far. I'm like searching for them. I like this one too. This is Fastly, like Fastly on Wednesday. I don't want to look at Snap because it's making me money. BYND. We haven't looked at this one forever. This one's out of fashion now, isn't it? Beyond. Still trading $1. And there's AMC right there. Earnings squeeze down again. Fuck you one more time. Then finally unclench over there. I kind of like Beyond. It's trying to break out here. I don't think Beyond is going to be in the market forever, but let me look at McDonald's really quick. Oh, Jesus Christ. McDonald's getting fucking hammered right now. They're making an argument right now that I guess sell McDonald's in the depths of hell if you're a bear. Keep selling it. This is in a bear market, bearish, and they're arguing right now that all these companies are fucked. All this lower income companies are fucked. So they're definitely on this trade to the downside. That's McDonald's. Sell it. Sell, 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 sell. It's going down. Iran, we'll look at that one. That's an old timey of ours too. Started calling these out years ago. Look at that shit. Beautiful. This fucker was down here, dude. Do you guys remember this shit? $2. Trading $49 right now. Had a high of 80. We're calling this one out. It was fucking baller. Low, lower high, lower low. I would expect the same on this one. This one went from $2 fucking dollars. It has squeeze potential on it. It has a breakout. A whole ton of spec growth does to trade this to the upside. I'd like to see this one go up. Up here. Fill that one, come back down. We'll figure it out later. I like Iran. They report Thursday after the bell. I didn't do Core Weave. Core Weave's already on the move to the upside. We've been posting about this one now for a while. On the Pro channel, I've been posting about Core Weave. It's going up, keeps going up. I like this one. Before we get to their earnings, I like the idea of this one going up. Go up here, come back down for their earnings, and then you start making new highs. I like CoreWeave a lot. Should I do open and affirm in Coinbase maybe for Thursday and Friday? Just a quick look. I like if you can get this one down, I like it. This is open. If you can get this one down, they report on Thursday close. If you get any kind of doom here, I like this one. Coin. I was gonna chart coin and then chart Bitcoin, but we're not getting enough time here. Wait a minute. What was that? I like Coinbase here. Love it here. This is Coinbase. I like it. Affirm. I like Affirm too. I like it for the equal legs up here. I like it for even continuation over here. Like Affirm. We haven't talked about Sound in a while. That was another one, an early pick. I like them too. I like Sound. Back to liking Sound again. Let's go back and look at here at the closing end of the day. Let's see if we get faked out in here. I think we are. I think this is a big bear trap. So be very careful, or not careful, but you want to watch this close. It's very important to watch this close here. We'll know like end of the day, 4:15, if they're going to roll us down into the into Friday on this close. This close will tell us should tell us everything we need to know about the rest of the week. And if it doesn't, they'll set it up again tomorrow. The market is being very holding its hand very tightly right now. Like you can clearly see that the market is moving lower mechanically. And it's looking for any headline that's negative. Truth doesn't matter if it's true, doesn't matter if they come back later and say it's not true. The market is being manipulated right now. It's being pushed around. We have our first door lower that's opened. The door is open. We're not through it yet. We haven't put the second low in. And I think this is a trap for bears. Still. Half-hour trigger is crossing the hourly right now. I want to see what this price action is into the close here. It'll be very high manipulation under the bell. I'm reading some of what Trump said here. Trump said that the South Korean ship that was fired at wasn't being escorted. I don't know. There was a lot of mixed signaling about that. The U.S. said they were going to escort. Then they said we're in the vicinity, so if you have any problems, you can contact us. So the U.S. could be using a lot of bullshit right now. Like the U.S. is giving a lot of excuses right now. It's like
So, in an interview with Press TV, Iran's Foreign Minister Baghai urged the Persian Gulf states to stop trying to borrow security from foreign powers, warning that the US military presence in the region is a liability.
and Vix is poised here, man. Like Vix wants to rip. Watch this closely here in this close.
So, about a couple of minutes until Trump is due to appear on the video.
Yeah, I saw the link, but I didn't click on it. I don't think you're going to get him speaking until here. I'll bring it up. This would be surprising if he comes in before 4 p.m. I've got him on here in the background. He's in the bathroom right now with Robinhood app open on his golden phone that nobody has but him. Says he should be out right now, but I don't see him. I would bet he does not come out until after 4. If he does, it'd be very unusual. I haven't seen that since COVID. Like he'd plan to be here at 4 p.m. and then he would show up at like 4:15, 4:16, start talking. He'd start pumping all these companies after the bell. He usually shat on markets too at the end of the day. It was always like shit on the market at 4 p.m., come back on at 8:30 a.m., save the market. I haven't seen much. I've seen only a little bit of that this time around. It's been rarer than it was during COVID. A lot of press here too. Press is stacked. Just note here that VIX 9-day is poised for a big move higher. I'm surprised there's as much press here for a small business summit. He's set to host a small business summit at the White House on Monday, highlighting what the administration says are major economic gains for small business owners. Just listen to this closely before he comes out. The event comes as part of the National Small Business Week, with more than 130 business owners from across the country are expected to attend. Participants will represent a range of industries, including manufacturing, food production, McDonald's, defense, energy, and retail. He's expected to deliver remarks recognizing the 2026 Small Business Week award winners and outlining his policies. Key focus of the administration's tax policies aimed at small businesses. The White House says the president will highlight provisions from the Working Families Tax Cuts Act, part of a broader tax package signed into law last year. The policy made 20% small business tax deduction permanent and allowed full expensing for new equipment, factory construction, and research investments. The plan includes provisions to reduce taxes on tips and overtime pay, as well as expand the child tax credit. According to the Treasury Department, millions of workers. Here we go. Uh-oh.
And here comes Trump.
All right, so I'm going to pause the volume here because he's doing pomp and circumstance here. This looks like it's going to be a positive thing for him. He's got the whole pomp going. He's got he's got like everybody there. He's got reporters everywhere. He's got the music going. Oh, he's got a bunch of executive orders in his hands. He's looking to throw his signature around.
Group of people outside.
I think you're getting happy Trump here today.
And it's beautiful stuff.
Watch me be wrong.
Made in America. It's great stuff. Please sit down.
He looks like he's happy though.
I'm thrilled to be
Oh no, he's slurring.
welcome you to the most fabulous place, the White House.
Oh, he's slurring. He's tired.
Quite like it. People come from all over the world. The King and Queen were just here, and they looked and they said, "This place is just amazing." when they came into the Oval Office, they said, this is something.
He looks tired. He looks like he's been up all day.
They've seen some great rooms, but it is a very special place as we celebrate National Small Business Week. So let me begin by saying congratulations to the small business people of the year from all 50 states. It's a big deal. It's a big deal, and you can be proud of yourself. Our country's made up of.
I should have had him snort the Adderall before he came out.
That ends up being a really big business. As small business owners and operators, the people in this room represent the 36 million small businesses who create 40% of all economic activity in the United States. Think of that. A group of people added together. You're essentially the most important factor business-wise in the whole.
You know the first thought that just came to mind?
This country is leading the whole world. We are now. That I can tell you by a lot. You're the
The moment he's done, I do not want the next fucking president to be like him. I don't even care if it's a Democrat.
record business.
I don't want him trading the market with the fuck. I'm so tired of the trading the market shit with Trump.
Military operation, call it.
Already, we're not even that far into his presidency.
Trump praising stock
We had
market
all new
gains
highs,
amid
and I
Iran
said
war.
we have to take care of business because we can't let that happen. So we did a little detour, and it's working out very nicely. They have no Navy, they have no Air Force, they have no anti-aircraft equipment, they have no radar,
Trump
they have
says
no
Iran
nothing, no
detour is working out
leaders-
nicely.
Leaders happen to be gone also. But,
And
they
just
don't have
reiterates
no
what he said in the
weapons.
past, that they can't have a
They
nuclear.
got no leaders.
We're also pleased to be joined
We're a real time now.
by Secretary of Energy Chris Wright, who's been amazing. Where's Chris? Except everybody was
10
wrong.
seconds.
They thought that energy
Boston
would be at
Court reports here the
$300.
White House is on lockdown.
Right?
Reports of shots fired a
$300
few blocks
barrel.
away.
It's like at a.
Oh, come on, financial juice. Come on, dude. Fucking Christ.
Market close imbalance, S&P 500
This is a scam.
billion,
Fucking
100 sell side
shots fired a few blocks away from the White House. Oh, God.
and Max 7
There's a few shots fired a fucking few blocks away from the White House every day.
says
Like,
the oil
it's
prices
DC.
rapidly once the war is over.
But we're taking care of it. We have Administrator Kelly Loeffler.
There's reports of a homeless man causing problems 4 blocks away from the White House right now.
Pretty good name. And I always say it's the small business is a giant business because when you add up your whole department, that's not a small business. That's a really big business, the biggest. Under the last administration and their radical left.
Someone wants a short to print here, big time.
Reports that
Crushed
the White
by
House
the
is on
worst
lockdown.
inflation
Reports
in
of shots
American
fired
history. We
blocks
had the
away.
worst
According to
inflation
Al
under
Jazeera.
Biden.
According to Al Jazeera, too. Fucking Christ.
If I don't correct, then the papers, the media.
Oh!
Made a mistake. Well, the official number is 48 years. I say the worst in this because I don't believe the 48 years. I say it was worse than that, but in many ways, 48 years sounds worse.
We have reports that a ship is on fire. What ship? We don't know. Who reported it?
This is what I had.
Uh,
Now we had it down where
LL Tehran Marketplace Weekly. What is that? It's a newspaper that gives out coupons in Tehran. Why are you posting it on? Why are you saying it on Financial Juice right now? We don't know. We're just looking for anything doom. We've been directed to do doom.
estimated 356 hours of paperwork every year for small businesses. You know what that means?
We got to talk down anything positive right now. We got to staircase this shit down. We got to get as low as possible.
And our policies protect you and reward you. And also, we have to have something else that I think is good for your businesses.
Over the next 2 weeks, if you were to write down every one of these downstroke reports and then go back and find them, there's no news there.
My television star.
It's just all bullshit.
With us from the beginning, haven't you? Like
I kid you not.
all time, right? Thank
Where's the ship that had 2 missile holes in it? Where's the shots fired?
you. And you're doing good with your shop. I know you're doing good on the television camera, so that's maybe more. That's good. That's great. Thank you. Last summer, I proudly signed the great, big, beautiful bill, the largest tax cuts in the history of our country.
Watch this close in particular. If they slip this underneath into this close, pretty bearish in it tomorrow. It looks like someone, or, traders with enough money are trying to force this no matter what here.
No tax on tips, no tax on overtime, and no tax on Social Security for our seniors.
They dropped that shooting thing intentionally.
We add that to the package that we approved in my first term. We had the best financial years in the history of our country in my first term, and I think we're going to blow them away this term. You know, in this term, we
got to watch the close.
$1 billion being invested in our country. And if you look at the last administration, they had less than $1 trillion for 4 years. We have $18 trillion during 11 months. The 12th month hasn't come in yet in terms of the numbers. But in 11 months, $18 trillion investments. We have auto plants being built all over the country, AI plants we're doing, and we're leading China in AI. And I'm going to go see President Xi in 2 weeks. I look forward to that, but I'll say I'm leading. We have very friendly competition.
Trump says, I'm looking forward to seeing China's President Xi.
Very important trip. We provided 100% expensing and bonus depreciation, which is tremendous. One of the biggest things that you have. I mean, it's people have no idea how
Trump
big that
saying
is
on
to
the China trip
businesses,
that it will be very
so
important.
that businesses can deduct 100%.
I don't like this close, just so you know. Do not like this close. We got to watch it close here. Sometimes they'll whipsaw it back up after the bell. We'll watch it closely here.
You can take one. So you
You can always put puts on after the bell.
so successful in the first term, and now
We're going to stick around here till 4:15 and see what's up.
for a while. I really was going to make it for a 1 year period. That would mean you spend all your money immediately. Now, unfortunately, I gave you too much time. I was sort of against that. I said, let's do it for a shorter period of time, but we did it. It's the right thing. And this way, when I get out of office in, let's say, 8 or 9 years from now, I'll be able to use it. I'll be able to use it for myself. And to ensure that you and your family can keep your businesses in the family, we virtually eliminated the unfair estate tax or death tax for farmers and for small businesses. So, you know, oftentimes you build, I mean, I just met some incredible people. They have beautiful businesses, small businesses. They want to have their children. Those businesses were all long-term. It was, the father was there, right? We're just talking about with the beautiful pretzels. I said, pretzels, oh, those look good. I wanted to take some right now, but I didn't want to be rude and rip your bag apart. But the businesses they've been in business for a long time, almost every one of them. And you pass away, you want to have your children take over your business, they work in your business, and they got hit with a state tax, or we call
US
it the death
CENTCOM
tax. We
says
call it
earlier
both
today,
because it's the same
Seahawk and
thing.
US Army
And,
AH-64
they
Apache
couldn't afford it.
helicopters
They went out,
were
they
used to
take
eliminate
the business,
Iranian
they
small
mortgage
boats
it up to
threatening
pay the
commercial
tax,
shipping.
And they end up losing the business. They end up
Yeah, they didn't on Financial Juice. They didn't say that U.S. sank 6 small Iranian boats today, did they?
farms, you know. They want to be on that farm. They don't want to lose their farm. And it's land rich and cash poor. And they go out and they borrow and keep borrowing. We ended that. No more estate taxes on farms and small businesses. So I hope everyone's appreciative of it. Now, if you don't like your children, it doesn't mean anything. But if you do like to leave them to somebody that you love, then it's a big deal for them. You have other problems, but for them, it's a big deal. And I want to say thanks to these tax cuts. 12 million Americans,
At
small
5:04 p.m.
businesses
Eastern
got
Time,
an
we're
average
expecting
tax cut
earnings
of
from Palantir
over
Q1
$7,000, and our pass-through deduction alone is delivering an average of $4,600 in savings to
EPS
8
estimate of
million
28 cents,
entrepreneurs,
revenue
and
estimate of
is projected to
$1.54 billion.
generate $750 billion in economic growth for the country. So many, it's really amazing. I see it on the television. I don't call this fake news because this is real fake news, but when you look at some of the things that have taken place, we don't get covered correctly. But in terms of the truth, we're having
IPA refund transactions had to begin as early as May 12th, according to CBP.
$11,000 with no tax on tips and no tax on Social Security, no tax on overtime. And people are making sometimes 11, I've seen it just where they're asking people virtually on the street, how's it doing? And everyone's surprised, including me. I didn't know it was going to be as much, but I knew it was going to be a lot. But you have people that make an extra $7,000, $8,000, $9,000 a year between the no tax on tips, no tax on overtime is a big one. It's a big one. But the no tax on tip tips was great. I won the. Typically, I don't know why. I can't imagine people voting for the other side with their policies and everything beyond this, long beyond this. But we won Nevada by a lot, and typically Democrats win that state. And no tax on tips. A lot of people getting tips in Nevada, so it had a big impact on people, and much bigger than they thought. And they're just now starting to realize how big and how really wonderful the great big beautiful, I call it the great big beautiful bill is, because we really, it should be called the great big beautiful tax cut bill and regulation cut bill. We put everything in 4 years. If we didn't pass another bill, which won't happen because you always want to keep going. But
watch us closely here. This close is going to be very tricky.
It's called the great big beautiful bill, and one of the
Watch how, do you see above how weird this is up above? This is very sketchy. It's like a trap for bears.
put everything in one bill, and thank goodness we did it, because the Democrats don't approve anything. They don't approve. You can have the best thing. It can be for security. Look at the security. They want to defund ICE. They want to defund our incredible Border Patrol. And they want to, essentially, they want to defund the police, but they don't want to say it. It's crazy what's going on. So we put it all at the beginning. We have a little honeymoon period, a tiny little honeymoon period in this case, so we got it all approved. Late at night it got approved, and this was really done as a 4-year.
See it sneaking back up right now? This is like a fucking trap for bears, not bulls.
Everybody was surprised. They thought we had.
See it sneaking up here into this bell?
We would have gotten the little tranches done. There was so much in here that people had to approve it, and if we.
This is a bear trap, I think. I'm almost 100% sure this is a bear trap.
Individual elements would not have gotten done, and almost as important as the tax cuts, we've slashed a record number of job-crushing regulations. That includes for you, and that includes tremendous numbers.
Let me just look at Palantir real quick.
Regulations.
5 minutes
Stop
ago
your
to get
businesses,
Palantir
but they
Q1
didn't do anything, and
2026
they had
earnings.
no impact. If
EPS
anything,
estimate
they
of
made the
28
environment
cents.
worse.
Revenue estimate of
But we
$1.54
eliminated
billion.
129 old regulations for.
Palantir is back testing nicely. Hourly triggers coming up on it. Looking bullish to me. Looks good.
129. So for every regulation, think of that, 129, we lose them, we get rid of them. It was supposed to be one
You see that hidden hand come in to buy this down here?
in 12. We started off 1 in 7 with my last administration. We got it up to about 1 in 12. Now I see we have a 1 in 129. So we're getting rid of 129 nonsense regulations for every new one that we pass. And thanks to these pro-growth policies, our economy is roaring, and factory construction is way up. Consumer confidence is way up. Business investment is more than triple compared to that of just a short time ago. And before I took office, nobody can believe it. And nobody can believe the $18 trillion number that we gave you, because it's a record for any country, not just here, it's for any country. And a lot of that had to do with November 5th, but a lot of it had to do with tariffs. We charge tariffs to.
That's not the truth.
Come in. A couple of you were just saying to me that you're getting hurt by.
It started years ago.
Other countries making a product that's not as good, but it's less money because of the fact that there were no guards, no safeties for you.
And they were all in on it. It's not just Trump.
Some have said
It's all of our Senate, all of our House. It's a good thing. I'm for it.
because of the
You get it done nicely from the Democrats, and the Republicans do it mean to you.
there are no tariffs. Jobless claims just hit the lowest level since 1969, and more Americans are working today than at any time in the history of our country. So we have more people working today than at any time in the history of our country. That's so beautiful. I mean, what could be better than that? You say, like somebody was saying, oh, will AI take our jobs? Well, we have a lot of AI up. They said it's going to take jobs. I said, well, you're probably right, maybe a little bit, but it's going to create a lot of jobs. And did you know that more people are working in the United States right now than ever before? They said, no, is that true, really? That's the end of that argument. And a lot of good things are happening. And leading in AI is very important because that's a tremendously big industry. And we want to be able to lead primarily.
I'm not seeing anything on Palantir just yet.
Are very much active in it also.
Looks like it's going to be at 1605 minutes.
Government job, but
We're at 1602 right now.
100%. Think of that. 100% of all new jobs have been in the private sector. 100%. We cut a lot of government.
Palantir moving higher in post market right now and after hours.
Small businesses, but I
Trade 146.78.
think of that. 100% of new jobs are in
I want to see it trade 153,
do that. We
152 and a half, somewhere in there.
numbers of governmental jobs, and I feel sorry for everyone. And it's a hard thing to do. Many of those people voted for me, but now they like me because they went out, they got private sector jobs that they like better, and it's paying them sometimes 2 and 3 times more money. So it's worked out the right way. But you have to do that. You can't just keep. I mean, we had government jobs where you'd have 10 people doing the job of one person, and you can't make America great that way. So we did it the hard way, but the correct way. The correct way. Big difference, right, Cal? You see it. It's, nobody's ever seen anything quite like it. And
Duolingo, burr.
this is the home of federal.
My top 3, 1, 2, 3 in order. My favorites. Number 1, Duolingo. Duolingo just traded a high of $124.56, but then it came right back down. Take the money and run, of course.
We won 86% of the counties in the country. But here's a little bit.
Duolingo went up from tip to tail 13%, now coming back down. Of course, it's an auto sell.
A year ago, a little more than a year ago, is now one of the safest cities in the United States.
Went up 12 or 13%.
10
So
seconds.
we had to cut the jobs because we were way bloated with federal jobs. And, I could with one swipe of the pen.
No movement on BWXT as of yet. That was my number 2. My number 3 was Voyager.
$1.63 billion
And that's
with
what they
being on
would
the
do.
estimate of
They'd have bad
$1.54
numbers
billion.
coming up, so they'd
Adjusted
hire a
EPS
couple
of
100,000.
33.
I had Voyager as number 3. They went straight down, no up.
They see second quarter revenue between
We
1.8
terminate a lot
to
of federal
1.8.
jobs that are
You've been on the estimate of
unnecessary.
$1.68
And
billion.
they don't like me for doing
They see
it, but
fiscal
a
year
year
revenues.
later,
Palantir going cranking higher and then lower.
They saw
oftentimes in a place where
$7.18
they'd
to
much rather
$7.2
live,
billion.
they go to the place that they wanna
Adjusted
go. They're not
EBITDA
stuck in
of
Washington or
$990.3 million.
someplace
A bid on
And,
the estimate of
they do
886.
much better.
Palantir hit 150.76, but not the 152.50. That's an important designation. That's a huge thing.
You gotta do what you have to do. You have to.
You want to see the 152.50.
Bad or indifferent. I think it's probably bad, maybe politically, but and
Coming back high again.
maybe it's good. A lot of times.
Palantir sees fiscal year U.S. commercial revenue above $3.2 billion.
As you probably heard, the
again,
fake
above
news media
$3.22
treats me
billion.
very, very badly. 93% of the
I don't like this close on SPOOs. Be careful on SPOOs in a tomorrow.
swing states
Seen
where you get
Palantir
only
shares
bad
gaining
press.
2%
Fake
after
press.
boosting year revenue
They give me
forecast.
fake polls. They tell me
Yeah, well, send it to 152.5 then.
they did a poll on the war.
Palantir
with
sees fiscal
Iran.
year adjusted operating
Open the fucking door up there to $200.
for $5 billion.
Like it, and I don't
Being
like
on the
war
estimate
at
of
all,
$4.18
but we're
billion.
equipped better than we have the greatest military in the world. You saw what happened with Venezuela. You see what happens with everything. But they said 32% of the people are against President Trump. Well, when you explain it, like, is it okay for Iran to have a nuclear weapon?
Oh, fuck.
32%. But even if you said that, there'd be a 32%.
I'm just listening to Trump talk about nuclear weapons right now. He keeps harping on it.
You take a look at what's really going on. The other day, I made a speech in a great Florida senior community.
All right, I got to go. I got kids coming home. I don't know if you can hear that, but I got dogs freaking out.
Then I say, all right.
I don't like this close at all.
Making another speech, and this one's in front of the richest people in the world.
Don't like it.
An unbelievable group of
I want to short this fucker down into Tuesday. Okay. I'll be back tomorrow at 9:30. I'm not going to stay later today. Fuck up my voice. Not my throat will be fucked tomorrow.
tell you that. They'll speak, 'cause I'm honest. I'll say, it's not
I'll see you at 9:30.